Welcome everybody to the September 7th, 2022 live strategy series. We're going to be hearing from Norman Hallett of the Disciplined Trader, Ed Carter of Live Trading Alerts, Marina Villatoro, the Trader Chick, and Jeff Tompkins with Altos Trading. And I'd like for you to check out our website at tradersexclusive.com. It's where you're going to find articles and video trainings and really lots and lots of trading tips and techniques. Today we're going to be talking about 3 keys to getting funded, tight consolidation in a trend trade, a trader's worst enemies and how to learn to avoid them, and how to find the very best stocks that are beating the major indices. And you know that's just the tip of the iceberg. I want to do our government disclaimer now. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations that are presented here are subject to change at any time. Past performance is not necessarily indicative of future results. And we'd really like it if you could take notes and write a question down, like with a little bit of context, but hold your questions until the speakers are done, and that way they get the presentation completely taken care of. Now, I'd like to introduce to you our first speaker, Norman Hallett of the Disciplined Trader. He is bringing us their money, your profit. It's a prop trading truth. He's been a trader and trading educator for over 4 decades. He's done everything from running one of the largest options firms in the country to being an options specialist for Payne Weber. But if you ask him what he's most proud of, he's going to say it's being the torchbearer for modern trading psychology. And from his 4-minute drills for traders that have over 2 million views to his books on how to build trading plans, he's dead set on getting traders to make trading psychology a trading priority. Thank you for joining us, Norman. Let me give you control. Are you with me?
I'm here.
We can hear you now. I'm going to make you the presenter. Now you should be able to share your screen.
How's that look?
Now we can see your slideshow on top of your charts.
On top of nothing. It's on top of everything. Boom, 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 boom. Thank you, Sherry. Sherry, baby. Everybody now. Ed, I know you're on. I know you're there, Carter. Come on. Sherry. Okay, well, we're going to... Can I start?
Yes, sir. And do you want that to go into a slideshow, or are you going to present it screen?
No, I'm going to go right into a slideshow.
Okay.
Just like that.
All right. I'm going to mute myself and you can take it away.
Okay. Well, thank you. First, I want to see whether I can appear. Yeah, let's see. I just want to talk to you straight first. Here I am. There I am. Listen, you see all my things I collect from other countries. I wanted to thank Sherry for having me today. I'm going to talk about the notion of prop trading. It's an expanding industry right now. It's becoming bigger and bigger, and the reason is primarily because it's a moneymaker for those that are offering it. And I'm going to explain how they make their money, even though they may be giving you 80 or 90% of the profit if you were to get funded. But I want to tell you up front that prop trading is not for everyone. And I say that because you probably could fake your way through certain days and months without very strong trading discipline, but you won't get very far with the tight rules of prop trading. So unless you're willing to look in the mirror and say, hey, this would be a great exercise for me to focus and become a better, more disciplined trader. As I go through passing the test, I'm going to show you how that's done. And it's time for me to really start achieving as a trader, because that top 10%, the only ones that are making money are the ones that are disciplined. And you can fool yourself for a while, but not very long on your own. But if you're going to go for prop trading, you've got to have pretty near total discipline. So I want to say that up front. The other part is that it is doable. It is doable. So there is that light at the end of the tunnel. But again, I want to stress the importance of having a trading plan that fits, something like prop trading, and also not something like, but a trading plan that fits prop trading, and the courage and attention to risk that prop trading demands. Okay, so I'm going to disappear here. I think you've seen enough of me here. Okay, let's get going. I am going to make a presentation, and I titled it "Their Money, Your Profit: The Pros and Cons of Prop Trading." I think I've called this "The Truth About Prop Trading" in other, the one or two other times I've given this presentation. But I want to really be clear about where we're going here. Okay, here's the agenda for today. Why do you want to listen to me? What's the promise I'm going to make in this 45 minutes? What are the 5 secrets, really, of passing the combine? I've given you the golden one, but there are others. What are the rules that some of these trading plans have? I can't show you all the rules of all the, not trading plans, but all the prop firms have. But I will show you generally what they're asking. They're pretty common. I'm going to show you my working account. Most traders, believe it or not, although I'm looking at this panel that we have, I think everybody's a trader here that actually trades. And there's nothing wrong with a teacher of trading, not trading. You know, that's okay. I mean, if you've got a good stuff to say and you're moving forward with it, and you can relate it to people and they can improve, that's a good thing. Sometimes, though, I think, especially in this case, trading the combine, it's good to actually get in there and look to pass it yourself. That's what I'm in the midst of doing. I'm going to show you how I did in September and how and how I'm, or in August, and how I look to go forward. I'm going to show you what my chart looks like. I can't trade every day, but sometimes I can only trade one position for a moment. I got a business to run. I try to take a half a day sometimes and do it, and that's can be hard. But I'm going to show you the results of what I've done so far. Everybody has different times they can trade. And then I'm going to inspect some charts with you. That's going to be pretty much most of the time. I'm going to show you how to apply some of the things I'm talking about. I'm going to and demonstrate that to you. And then I'm going to offer you my white paper. I'm not here to sell you anything today, although I will show you a way that you can get involved with me if you want. But I really want you to download the white paper. You're the first ones. It just came out now. You're it. And it really goes over into detail some of the things that we talk about today if you're really, truly interested in prop trading. Okay, why listen to me? I've been around, okay, for 43 years. I think maybe you saw the lines on my face, pretty much from trading. How to Design and Construct an Effective Trading Plan is the latest book I've written on trading plans. Certain aspects of trading and certain periods of time take certain plans to be the most effective. I've written several books. This is the latest one that I actually wrote 10 years ago, but it's still available on these. I believe all these are still available on Amazon. I worked for Payne Weber as a commodity specialist. Didn't spend less than 2 years there, and it was more of a sales operation wound up than anything else. And I did run one of the largest option firms in the country. I had my own operations where I was managing as a commodity and trading advisor for well-heeled $250,000 accounts and up, and did that through my own IB. But again, as Sherry said, I'm most proud of my wife and myself's work in with helping traders with the mental and emotional aspects of trading, because that is what separates the 10% of winning traders from the 90% strugglers and less than winning traders. I want to move forward here. The promise that I make today is that I will lay out the pros and cons of prop trading, and by the end of this presentation, you're going to have a clearer idea of whether prop trading is for you. Hopefully, you'll download my report. You'll get an even clearer idea, where I give you a few more tips. All right, here's the 5 secrets of passing the combines. Now, the combines, I should say that first, that what is a combine? When you go to, when you look to be financed or given money by prop firms to trade, they will give you 80 to 90% of the profit that you make by trading their money. But in order to have the beauty of doing that, you've got to pass a combine. The combine is really a combination of two tests that are literally identical. The rules are a little bit different for the two tests, but what you're by combining the results of those two tests, you pass one, then you do it again, pass again. I'm going to show you what those rules are. Those two test rounds are called combines. You're combining the two test rounds. Okay, so you need a frequent, reliable entry trigger. Now, as I mentioned and Sherry mentioned, I've written books on trading plans, and there are different trading plans for different kinds of trading, and the different individual who's trading it. Not every trader. If you have a trading plan that requires patience, and you're an impatient person by nature, you may be tough running. Maybe tough for you to run that trading plan. So while somebody else, the patient person, is doing very well, you're not. So again, different plans for different folks and strokes. But a frequent, reliable entry trigger is important. And the important part of a frequent, reliable entry trigger in this, when you're trading prop trading, I believe, is having a trigger that pops. In other words, gives you movement in your favor early in the trigger's existence. When I give you a trigger, and I'm going to show you a trigger. When I give you a trigger, you enter the market when that trigger is complete, when the candle is complete, and from that point on, I expect the next candle or two to move in our direction. Okay, so I want it to be frequent, and I want it to be a reliable popping trigger. Whether it continues or not, that's the will of somebody else. But if you've done your analysis, you getting off to a good start in a trade. I think if you recall with yourself, generally when you have a big trade, it usually started off pretty well. Okay, I mean, sometimes you had to suffer, but generally a good, one of the great trades, in your history, you probably started off with a popping trigger. I'm going to show you what I mean by that in a second. You need tight risk parameters, otherwise you're not going to get any place with the combines. Very tight as far as if you're trading a $100,000 account, let's say, you can only you can't go below $97,000. So to lose 3% and then have the money taken away from you is a very tight rope. And so tight risk parameters, in other words, what you're willing to lose on each trade becomes much more than relevant, becomes a main focus. So tight risk parameters is very important. And I'm going to show you what I mean by that in a trading plan that I've adjusted to this combine for you. Scalp and runner approach. I mentioned, and Sherry mentioned, my love for helping traders with the mental and emotional issues of trading. One of the common issues in trading is that if you're a scalper, if you tend to want quick profits in a trade, what happens is you take a quick profit, and if the market runs, if it does it a couple of times, and you're already out of the market because you keep telling you kind of tell yourself, hey, why didn't I just kind of leave it on? Look at how well it did. That's the bane of the scalp trade. On the other hand, a trader who is more of a swing trader, who allows trades to expand and then tries to defend what the profit has been built in the account, in the position, when that happens and the market moves to some degree, it can always come back. And when it comes back, sometimes you break even, sometimes you turn a winner into a loser, and you say to yourself, why didn't I just take what God gave me with that scalp? If you have a trading plan that is both scalp and a run, in other words, each time you put on a position, you take two contracts. And I'm going to be talking futures market here because most of the prop firms deal in the futures industry. Some are in Forex, but less and less. When you take on a position, you take on two contracts and treat one as a scalp and one as a runner. By doing that, you're eliminating a lot of the head game and a lot of the head doubt that you have. I know it sounds a little interesting to some, but believe me, eliminating that part of the mental game by employing it into the plan is I think can be very key. It makes an easier life when you're trying to pass the combine. Nuances to fit the trader. As I mentioned, there are, if you're a patient person, you need a trading plan, and that really is built for, so you don't have to sit around a whole lot. Because you lack patience if patience is not your thing. But if there are moments in time where there are also some things in a trading plan, I call them nuances, that you can do to alter some of those tendencies that you have, either to emphasize one of your strengths as a trader, mentally and emotionally, or to try to offset some of the things that you're not good at from a mental and emotional standpoint. So nuances I find are very important, and I don't believe anybody does nuances. I've never heard of any trading plan or trading plan builder talk about nuances, but I think this is very key to a good trading plan. And fifth, you have to have a clear preserving exit strategy, meaning that when you're trading for your own account, and you're not trying to pass a combine, you can let things run for a while and look for big trades. I have found that once you have a nice gain in that runner part of your approach, you're best off getting tighter and tighter. I know it sounds obvious, but a lot of traders don't do it, in preserving that profit that you've built. So you need a clear preserving exit strategy. What you're doing is you're making decisions that grab what you've already created, as opposed to giving it back and then going on to the next trade. Because you have a frequent, reliable entry trigger, you can keep moving on. Okay, so those are the 5 secrets to passing the combines. I'm going to show you now. Let's take a look at a frequent, reliable trigger. This is the trigger that I use in Loaded Gun, and the reason I named the trading plan Loaded Gun is because it is because it looks like a handle here. This is where the trigger would be, and here's the barrel of the gun. We're pointing northward. I don't know. I took a look at it. My wife hates the label I gave it, but it's what I saw when I first glanced at this trigger. And what it is a trigger of indecision. So either I like a very small body on the first part of this 2 candle trigger. I like a small body. Doji, of course, would be the ideal small body. And then I like this extension candle to be reasonably strong compared to this candle here. Now I could say 3 to 1, 5 to 1, 3 to 1, 5 to 1, but I can't say that. You have to experience yourself what a thrusting candle is as you look through your own charts. Because if this is a doji, then 3 times nothing is nothing, or infinity, or whatever. You can't say a 3 to 1 rule, because otherwise this candle would be here. As far as the length of the extension candle compared to the hesitation candle. So what's happening here is that the market is hesitating. It doesn't have direction in this, say, 5-minute period. I'm going to talk about a 5-minute period because that's what I usually trade. I have traders that are trading this in the 1, 2-minute, 10-minute charts. It really doesn't matter. It works in all of them. So here is a hesitation candle where in this 5-minute period, the market couldn't decide really where it wanted to go. Well, all of a sudden, you've moved, you've made a decision. I can see those traders on the floor in New York and Chicago waving their hands in a crazy fashion when this happens, okay? And I like it to, I like this candle to pass through a moving average. It changes. I'm going to call, I think the ones I'm going to show you today is an 8-bar exponential moving average, but a 8 or 9 exponential moving average. When this crosses through the moving average, where you have the hesitation candle on one side and then a breakthrough in the strong candle on the other side, this is a buy signal. You'll be buying 2 here. I'm going to be showing you, say, the micro mini S&P. I'm going to show you how yesterday I made, I did get a chance to trade about most of the day yesterday, and was able to, and I was only trading 2 and 3 micro mini contracts and made $570 yesterday. So I want to show you how I did that and how it works. I think I used the 8 there, and again, I'm going to show you the charts in a second. So that is the trigger, and this trigger it's important that you know to buy 2 here, put your stop in below, a tick below whichever of the 2 candles is lower, so it would be down here, tick below this line, this bottom here. So buy 2, put your stop in to sell 2 on a stop here, and then you want to put your limit sell to grab your scalp position. You measure this body, measure the body, and then extend that same measurement from the close. You'll be right around here, let's say, okay? So you would put a limit sell to sell one of your contracts here. If the market moves higher and you fill your limit position, you take your profit on the scalp, you move your stop to break even. Okay, move from here. I usually move it a tick above break even. Okay, so that I don't get caught in the bid and ask spread, and I'll get a break even trade on the second position if the market backs off. Okay, I'm assuming that you got that. So let me continue on. Sherry, if you see any problems, let me know, because I'm not checking the chat. I'm squeezing the hour presentation into 45. So let me show you how this works. Again, hesitation, strong movement through a moving average. I think I used the 8. We'll see 8-bar exponential moving average, and then boom, you're buying 2. Stop down here. Put your selling 1 here. Again, you're measuring this distance. Selling 1 here, and when you get that sell, then you move your stop to break even. Okay, let's take a look at it. This is a canned chart. Okay, this is from a couple of years ago, I think, but this is the signal in action right here, just to show you what it looks like. Okay, this is the signal in action. You'd be selling 2 here, putting the stop up here, putting your limit buy here on one of those 2 positions. And when the market right here on the next candle, you would be getting your scalp, and then you'd move your stop to break even. Well, that is kind of moot, as this market really took off to the downside. Okay, I am not going to go through exiting, which of course you know how important exiting is. It's probably more important really than the trigger, but I think it's most important in this short period of time that I show you the results of a very strong trigger. And the fact, listen, if you can get a head start on a market, you have that much more capability to, it won't make you a winner, but because you need to know how to exit, you know, when to let something run and when to take a profit, but at least you've got the odds in your favor starting off. Here's another, you know, you don't always wake up, you know, you get up and the first thing you look at your chart and you're already in here right here and you say, oh, I missed it. Well, we went sideways here, and here's on one side we have the hesitation candle on one side, and then the movement down strongly through the, I think this is the 8 here. I don't have it up on there, but again, you sell 2 here, put your stop up here, buy 1 back here. You would have had your scalp, and then you're going to continue to run. Okay, and you'd be out in this particular case. You'd be out on this reversal. See, here's a reversal. Now here, this is interesting because this is this is a beautiful signal, and the reason it's a beautiful signal, one of the reasons is that it's exceeded this recent low. It's tested, broke through, but survived the test of this low, so to speak. and now is coming back over the moving average. Okay, and the problem here, the challenge here is to measure the risk. Remember, you're putting it at the lower part of the two. You're putting your risk down here. If this does not fit into your risk parameters, and then your risk parameters may be, if you're trading a $100,000, if you're trading the combine, trying to pass for $100,000 account where you have to make $6,000 before you lose $3,000. I don't like to lose any more than $150 or $200 on a trade. So, and as you gain more confidence, you can expand that a bit, but I implore you to think very, very small in the beginning. And one of the reason I traded small yesterday was believing that, hey, let me do what the Romans here are doing. When I'm teaching, I want to do and see how that works. So that's how I've been doing. Here's and look at this move. You'd be taking your scalp here. I mean, I don't know how you don't know how this line actually went. You know, it could have gone down and up or up and down, but you know, maybe you sweated a little bit here, but not for very long. You had a nice scalp and then move higher. Yeah, but here's some chop. Here's one where you would have lost. You would have lost on both of these, okay? If you would have taken this late in the day. The truth is I would only have taken one with our rules on loaded gun, but I wanted to show you that you will have losers. But when you have losers, they're small, okay? These are small movements as opposed to what happens, what the potential is, and what happens a lot of time. I'm going to show you some real charts, real active live charts that show you that that losing is okay. We all know that. The trading plan I'm going to show you is about it runs around 2/3 winning days, 2/3 winning trades, 1/3 losing days, 1/3 losing trades, and I'm going to show you how that is. But when you lose, you want to lose very little. When you win, you want to win at least twice that. So let me keep going here. I think you got it down about how the reliable trigger works. So here's some important words. The loaded gun system is simple to understand, set up with easy to follow rules that'll work in any market. It works in any time frame. It takes me less than 5 minutes to look at all the markets I trade and make my plan for the day. First, test the loaded gun and trade it in sim to build your confidence. Then go live, examine all of the included nuances, and then test them to see if they improve your returns. After that, most importantly, follow the rules, join the small percentage of traders who consistently make money in the market. The final point, no system is 100% perfect, so you will have some losing trades. Keep your losses, keep your risk low. If you trade it correctly, you'll have many more winners than losers. From a professional trader who meets. We meet every last Wednesday of the month. We get together. Ted is usually there, and we talk about our trading loaded gun. Everybody that owns it, we get into it. So Ted's one of the original owners of loaded gun and has had a lot of success with it. And he told me to tell everybody that. The concept of nuances. I'm going to fly through this. Every trader is different. Again, no one size fits all. I mean, there's somebody has got a great trading plan, making a lot of money, shows you their end of the month statement, gives you the plan, and somehow you can't run it. I've told you some of the differences why that would happen. Different personality types need different trading plan and elements and rules. The concept of nuances we've talked about, optional rule adjustment to fit an individual, because nuances address the psychological factor to reduce the and eliminate potential human error. Here are some examples. Here are some of the nuances that we have in loaded gun. Candle saves. In other words, when it looks like when the exit rules tell you got to get out, there's a way to stay in without adding a lot of risk. I show you that for those people who like to stay in a little bit longer and not move on, really believe in the trade that they have, but it's not happening. You can stay in a little longer without adding a lot of risk. And combining moving in time frames. I mentioned to you that it's important to have a frequent time trigger. If you combine time frames, in other words, if you're looking at a 5 but then shift to a 10, or a 10 and looking, if you're trading from a 10 and you can't see any signals and you look to a 5-minute chart, sometimes that will uncover one of the signals and you'll have a trade. So you can actually uncover trades by moving around on time frames a bit. Too much risk is a way to eliminate that. Then I can show you, for instance, that example I showed you where the risk was high. Multiple positions, when do you put on new positions, add positions? When do you take them off? There's a way to do that for different personality types. What if there's another trigger that happens in your direction while you're already in a trade? Do you put on more? How do you act? Triggering congestion, all these things that you need to um, decide on before you start trading on how you want to approach it based on who you are as an individual, okay? And something I call undertow. I like to check the daily and the weekly charts to give me a general undertow of the market. For instance, in yesterday's trading, I decided before I started that I was only going to take short trades in the E-mini, and the reason I did that is because the daily chart was decidedly negative, and I wanted to give myself a little bit of an advantage. So I explained a little bit about that, how that works in undertow in the course. Your processes are usable by every trader for every trading style to guide each of us in creating our own personalized system. The tools have helped me increase my profit, win ratio, confidence, and most of all, my job satisfaction. You got to like what you're doing. As a full-time trader, it's been the greatest benefit of them all. This is Alan Halstead, who's a real estate developer. He's probably doing a lot more trading now than real estate developing, but a couple of months ago that wasn't true, earlier in the year. But he is a terrific trader and loves this system because of a lot of the nuances and so on that I've shown you, and the trigger and the exit strategy, which I can't go through. But it's all simple. It's part of what we call Simple Trading Plan. It's our premier Simple Trading Plan. Okay, here are the rules. Retail trading versus proprietary trading. Trade your own money. If you're a retail trader, you're trading your own money. You trade through any broker that you want. Okay, you can trade what you want. As long as you can meet the margin, you can trade what you want when you want, and you have total flexibility on how you want to handle your trades. Okay, when you have a prop firm, the capital is theirs. Trade made through a specific account. They've made me learn Ninja Trader. Okay, I'm learning Ninja Trader because most of these trading prop firms are hooked up with another one. Okay, typically speculative trading. Okay, and activity is limited. I don't know if I spelled limited incorrectly, by risk management. Again, you got to really pay attention to the risk management. Okay, and here's how they make their money. They make their money through these fees. Again, most traders do not pass the combine. 90% of traders cannot pass the combine. And I'm going to show you the rules of the combine. If you're applying for a $50,000 account to trade for them to fund you with, it's going to be $165 a month. And all trading plan, I'm talking to you about Top Step, the firm that I went with. But look around, see the one that you like. I can give you an intro to Top Step if you want. $100,000, you're paying $325 a month for the honor to pass the test. Well, if it takes 3 or 4 months, they've already gotten 1,000, 1,500 of your money, and nothing's happened but you trying to pass the exam. Most people will not. This is where they make their money. Okay, once you pass the combine, you no longer have to pay this money. Okay, two-step process to pass. You've got a $3,000 profit target, daily loss limit of $1,000, weekly loss limit of $1,000, and you can trade up to 5 contracts. This is in a $50,000 account. Okay, $3,000 before you lose $2,000. You got to make $3,000 in a step. Step 2. You've got to do this. In other words, you pass this, then you got to do it all over again with a little bit tighter rules. And you can't trade before and after a major report. There's no trading into holidays. Addition of a scaling plan, which I can explain at another time, but it's not that key. And best day, in other words, they don't want any one trade. They don't want you to have one big trade and make $3,000. They want you to. No one trade could be responsible for more than 40% of the total, okay, that you're going for, of the 3,000. Okay, this is us loving the idea, but there are traps, and the traps are, if you break any of the rules, you got to start over. Even if you break it in test 1, you got a test 1, you start over with test 1, just cost you $99 to reload and start at 0 again. If you make that problem, if If you're in test 2 and you break one of the rules, you trade during a holiday, boom, you got to go back and to test 1. You got to try it all over again. So they try to keep you in that trading monthly as long as they can. If you break any of the rules, again, you got to start over. You blow up an account, you break any rules, you have more than 5 positions on it, you put on 5, and all of a sudden, when you're trading you're trading for a $50,000 account, you're testing for, you put on 5 positions, the maximum, and then you go to offset those 5 positions, and by mistake, you add another 5 positions, you're done. Okay, there's no correcting your mistake. You start over. So there's a lot of traps. You got to be careful. Okay, I'm going to show you my working account now, and then I'm going to look at some charts, and then I'm going to give you a download. Okay, let's. I'm going to. Let's reduce this as best as I can. I think that should do it. Yeah, let's look at some charts here. Let's look at. Well, let's first look at my account. I'll show you that real quickly. Here's what my account looked like at the end of just the last week before for this month started. You can see how I started at $100,000. This is where I'm going. I need to make $6,000. And again, a lot of these trades are only one trade. Some of them are more than that. But again, everybody's chart is going to look a little bit different. But I want to impress upon you the motion of this chart. You can see that when I lose, it's a very small amount. Lost day, big nice day that took out these 2 lost days. In fact, my worst day was $212. My best day was $670. Winning day, my average winning day 382, average losing day less than half of that. This is really where you have to concentrate. Okay, and you can see I'm at 4,100 for almost 4,200. So I'm thinking that by the end of next week I'll have this done, and hopefully I can find some time to trade. I'm sure I can. I want to get this done to get onto the second test, which is the same thing. Do not and here are the rules. I've mentioned those to you before. I just wanted to show you that I'm real and that I'm doing very well with this. And this is what you want. You want this kind of a chart. Okay. Let's take a look at my trading yesterday. I wanted to kind of show you that. I've marked it up a bit so that you can look at it. I hope it doesn't look too. This line right here, I'm looking at my time. I've got about 5. I'm going to go through this and I'm going to give you my offer. This is the 8 o'clock line. I'm sorry, 7 in the morning. This is when I start. See this right here? Forget the white. This is what we call a guardrail. This prevents us from getting into trades. It's part of the exit strategy, but only look at the goldenrod, the gold one, okay? In fact, let's take out this so that you're only looking at the gold. Okay. This is not a perfect signal because I like this to be on one side. It straddled the line, but it was early in the day. I like this high here early, and I got out here with the scalp. So you can see I took a quick scalp. I shorted 2 positions. I didn't go further than scalp because for me, again, I like to start the day with a nice winner. So I had a little winner here. I think this is about $80. It was 2. These are micro mini S&Ps. Here's another, the next signal. Didn't take long. By 8:15, I was in again. And you can see it kind of challenged me here. There's a number of, when the market goes sideways, I have rules for how long you stay in. But in this particular case, look what happened. As the market went down, I was out of my scalp here. Again, what I did, of course, is that I took this distance and I put my limit buy-in to one of the 3 positions. I shorted 3 here because I really liked the fact that we had a double top. So I went a little stronger, 3 micro mini positions, took my scalp out here, and then look at this guy. This was a $400 trade in a micro mini contract where I was carrying only 2 of them for most of the time. When I got away too far from this, from the moving average, I took the second one and I took the third one upon this reversal right here. And this reversal caused this move again. Small body, a series of small bodies, movement through the moving average, a buy here, and you can see I didn't take this trade. And the reason I didn't take this trade is because I decided I would only take short trades. Okay, so I was out here. Then here was a losing trade. I shorted 2 here. You see this right here? This was a signal right here. I shorted 2 here and immediately I was out. So here was a losing trade. I gave back 100 of this 500, I think. Then had a nice signal here, hesitation, movement through the moving average, very nice, against the top, really like it. So I went, it was getting a little later in the day, and I knew I was going to have some things to do. So I only took 2 positions, got out of my scalp. Actually, I kept these 2 as runners. Okay, I decided, hey, I'm ahead $400. This may be my last trade. Let me treat this as a runner, and I was able to get out here. There are rules that where I did not reverse here for a reason. I can't tell you what that is. It's part of the exit strategy, but you can see how these triggers can work really well. Anyway, this day resulted in a $570 day. Okay, so I'm hoping that you see. Let's see how again. I'm looking here at the possible signal here. Here's a recent signal. You're not in, even after a move has happened. The fact that it backed off. Look, I'm not sure even drawing any Fibonacci retracements. No, I'm going with the basic system. Hesitation, movement higher. This would have been a nice scalp. This is an active chart right now. Okay, so and I would have been in the second position going higher. Okay, so I just wanted to show you reality here and how it looks to actually be trading the system that I talked about. Okay, I've got a special gift for you here since I've only got 2 minutes left, and I wanted to give you this. This is a paper. It's only 4 pages long, 4 or 5 pages long, but I wrote it on my experiences and the experience of other traders that are working with me, that own Loaded Gun and work with me on the combine and so on. I want you to I want you to have all the facts. I really want you to consider getting Loaded Gun and working with us. If you're looking to pass the combine, I don't know anybody doing it with you like this, and helping you make it happen. Okay, and I don't mean with where I don't have live. I'm not trading live where it's. I'm saying we meet, we talk, we talk about our results, we talk about what's working. But Loaded Gun is a terrific trading plan because of that trigger and because of the exit strategy, which I can tell you more about at some other point. So if you would just go here, it's a free download, thedisciplinetrader.com/prop-win. Okay, the Disciplined Trader. I'm going to let you write that down. Okay, because spelling disciplined took me about a year to get that before. When somebody asked me my email address, nhallett@thedisciplinetrader, I say, let me spell that for you. So there you go, thedisciplinetrader.com/prop-win. I want to show you one other thing, because I know a lot of you have been wanting Loaded Gun, and and now it's available again. Loaded Gun simple trading plans, usually $14.97. That's what we sell it for on our site. It includes the core, which is the basic trading plan, fits on 1 sheet of paper. Remember, it's a simple trading plan. The nuances, we have our own Facebook group, we have monthly meetings. I'm also including unlimited one-on-one coaching for 90 days. You and I will get together, and that's really where the rush is here, because I'm running out of time on my calendar. I can only take a few more people here. Unlimited one-on-one coaching for 90 days. Look at the stuff. Let's go through some charts together. I want to make sure that you understand it, you and I, okay? It's a total value of $39.97. Normally, we sell it at 60%. I'm giving you another 50% off, $747 for this. Comes with a guarantee. You can read it on the site, simpletradingplans.com. Again, the offer to work with me is ending soon. It could end at the end of this conversation or tomorrow, whatever, but I only have so much room on my calendar to leave the space for the one-on-one coaching. I want you to learn how to do this. It's doable, but you got to have it together. And I want to show you how that's happened. So simpletradingplans.com, okay, is important to know. And if you would put that in the chat, you guys, I'd
Posted them both in the chat for you.
That. Okay, and the disciplinetrader.com/prop-win.
Yes.
That is pretty much where I am with this. Do I have an hour, or do I have 45 minutes?
45 minutes. You're
Okay,
right
so
on time.
I'm right on time.
But now if we have questions, you guys are going to have to email Norman. Do you want them to email you at a certain email address?
Please do. Yeah, just throw in my personal email, nhallett@thedisciplinetrader.com, NHALLETT @thedisciplinetrader.com. You certainly can email me questions. and I will take care of that. Normally I would jump to the chat, but I have a doctor's appointment right after this. So just email me any questions you have. I really want you in. Make sure you get the download. And if you're interested, you know, let's get going on the simple trading plan, and let's work together on fasting the combine. Thank you, Sherry. I appreciate it. Hang in there
Thank
for Ed, I think
you.
is next. Ed is next, and
Yes,
I
yes.
promise he won't say a word about combines.
Well, we really appreciate it when you join us. You always bring something wonderful to the table there. So I hope to see you back again in the near future. And I hope you have a great day and your doctor's appointment turns out great.
So do I.
All right. Well, you have a good day, Norman. Thanks so much. All right, folks, here we go. That was awesome, right? And you need to take advantage of those offers because that's crazy, uh, crazy value. So let me make myself the presenter, and I want to introduce to you our next presenter. That was Norman Hallett of the Disciplined Trader with us just now. And now I want to remind you that if you have to leave early, you can see a replay of this webinar and all of our webinars. And you just go to tradersexclusive.com and you come over to the Trader Education. And it's actually right here as well. You go visit Trader Education webinars. And then you go down and you'll find us for our archived webinars. And I'd like to introduce you to Ed Carter of Live Trading Alerts. He's going to talk to us about goals, discipline, and my two favorite trade setups. And Ed is the architect of Live Trading Alerts, real-time scanning and alerting software. He's been trading for 25 years and coaching fellow traders for over a decade. Ed is a technical swing trader of both stocks and options. His focus is on trend, support and resistance, price action, and using discipline in his trading. Ed's an expert on using computers to improve both the effectiveness and efficiency of the trading process. And in addition to LTA, Ed also designed the Trader Vision 2020 trade planning and journaling software. Welcome to you today, Mr. Ed Carter. I appreciate it very much that you're going to join us. I'm going to make you the presenter now, and you are self-muted.
Excellent.
There you go. We can hear you. I can see your screen as well.
Excellent. Well, thank you, Sherry. I appreciate it very much. And thank you to all the attendees.
Take it away.
Okay. Thanks again for having me and for everybody showing up, giving me some of your time. As you probably have seen, we're drinking from the fire hose here. Excuse me. I've got a bit of a cold I'm fighting, but we're time constrained. So please feel free to get a hold of me later if you need more detail. I've done hours-long presentation on each of the topics that I'm going to try to touch on here today. So let's get started. Again, I'm not going to go through this in detail, but this is a disclaimer. This is for educational purposes. I'm not soliciting you to buy or sell any particular ticker we might happen to look at. So just keep that in mind. So on the agenda today, I'm going to talk about things, something in the vein of what Norman talked about. What I have found in the 25 years I've been trading, I started in the mid 90s when I sold my first company, is that trading success is not about some whiz-bang indicator. It's not about some incredible setup. It's a very, as Norm said, a very personal thing. It depends on you as an individual. And a lot of people don't understand that. And what I found are the three pieces or four pieces that make a trader successful are, number one, understanding that it's a business. And therefore you need to treat it like a job. You have to have goals that you can measure yourself against. You have to have rules to guide your actions. You have to have a set process and the tools required to get you from A to B. And you have to have discipline to stick to those hard rules and hard goals. And it really, one of the things that I've learned is that the key to life, not just trading, is that it doesn't matter, get better. It doesn't matter whether you had a successful trade or a losing trade on the last trade. That's gone. It doesn't matter. It no longer matters. Now you need to get better. The only way you get better is to focus on the process, not the specific trade that that could be influenced by the market or some event, some news item. So that's the key focus that I want you to look at. And then we're going to look at my two favorite, basically the only setups that I trade. I'll give you an offer, and if we have time, we'll do some examples with live charts and take questions. So one of the things that I have found in my trading career is that I'm always my worst enemy. Nobody's out to get us. Nobody's out there watching your orders and scalping you, and algos are front running you. Everybody has to deal with it. But the problem is not outside of you. All of our problems start between our ears. And mostly it's the impact of emotions and our own personal lack of control that destroys our results, whether that's fear or greed or anger or whatever it is. We do stupid things because of our own brains. So the idea is to use goals to remove indecision and put parameters around you, hard rules to guide you and take the emotions out of it. If you've got a hard rule, it doesn't matter whether you're experiencing fear or greed. The rule is the rule. And then that hard process that includes the right tools that allows you to control your trading. The way I like to think about it is I was at a golf tournament once and saw Tiger Woods make I don't know, like a 50-foot practice putt. And I was saying, oh man, what incredible skill. And the guy next to me happened to be one of the security guards. And he said, listen, that's not what wins the money. If I go out and cock my gun, stick it behind his ear, would he be able to make the putt then when the pressure's on, when his emotions are high? That's where you make the money. So having the goals, rules, process, and discipline, that's what's going to make you the money in trading. I'm going to give you this spreadsheet later, so don't worry about it. But it's just a spreadsheet I threw together to help people create trade plans, play with the parameters. Essentially, you just need to manipulate the yellow section of the sheet and allow you to, on a top-down or bottom-up basis, develop the trade plan that'll tell you how big of a position you can take and how many trades per whatever do you have to make per month, per week. What ratio are you winning now, and what's your goal? Set a path for yourself to start from here and to get to there. So, give yourself a realistic but stretch set of goals, and that will be the basis. And we'll talk about this. As you can see here, on this particular plan, the trader only wanted to make 20%. They started out with a small account, 25K, and they only wanted to make 20% per year to start with. You can always increase your goals down the road, and that maximum position size of 4%. So that tells them that they're only going to put $1,000 into each trade, that they have to set a stop loss to limit their losses to $50, which is very, very tight. But for a tiny account, that's what you've got to start with, and that they need to take profits along the way. So in this case, they've got to average $33 profit per trade. When they get it, they need to take it off the table. They can let the rest ride, but they've got to take that 33 bucks. It's a hard rule. It is, it's part of the fact that trading is a job. It's not a lottery ticket. It's not a hobby or an adventure. It is a job, and you need to treat it that way. So let's talk about trading rules a little bit. Again, I'm going to give you handouts that give you 25 rules that I use, and also some option trading rules that I use for simple options trades. Use those as a guideline for yourself. Print them out, look at them. You've got to make them your own. As I mentioned earlier, we are all individuals. And Sherry, go ahead and put those links out if you want. I've got a slide for it here in a bit, but that's fine. But essentially,
Will do. They're going out now.
okay. We are all individuals, and so we all have our own, our own. How much can we lose? It's different for everybody. Some people will never sleep again if they lose 50 bucks. There are other people that have no problem at all being happy-go-lucky if they've lost 20,000. Everybody has their own level of fear, of greed, their own emotional mindset. Am I angry today? Am I happy today? Those sorts of things. And you need to create the trading plan, the trading rules that fit your personality. Are you patient? Are you impatient? The things that make you you. Because you might be able to once or twice trade somebody else's plan and be successful. But over the long run, your personality will come through. And if you haven't built the rules to your own psychology, you are in a world of hurt. So the idea behind rules is they're there to protect you from you. They're there to reduce your emotional turmoil, as that golfing example I gave a minute ago. Do you make better decisions when you're down 5% or you're up 7%? Should I take profit? Should I let it ride? The little devil and angel on your shoulder, the devil's telling you, let it ride, let it ride. The angel's telling you, mama needs a new pair of shoes, take the money. So, those are the things that are fighting you. If you have the rules built ahead of time, when you've got a calm, cold look at the things, a logical approach, you're going to make much better decisions by setting the rules and adhering to the rules. And anybody who knows me as a trader or who have seen me in the past knows that my rules are my rules. I don't care what's happening. I don't care if the house is on fire. My rules are my rules, and I will get out when the rule says to get out. I will get in when the rule says to get in. Nothing else matters but following the rule. So that's it. They're there to promote consistency. I'm just going to give you a couple little examples here. Again, this is not, comprehensive. That list that Sherry sent out that you can download, again, it's free. There's no, I'm not tracking anything. You just download it and use it. Are the ones that I use, but here are some examples. I only trade with a trend. Personally, I'm a trend continuation trader. And what do I mean by trend? Well, I use the 17 EMA to define the market trend and the stock trend for me, whether I'm trading stocks or options. I don't chase. What do I mean by not chasing? If a stock is up 6%, or we've had 3+ candles going in the same direction that my trade is going to go, whether that's long or short, I don't buy. That's the rule. It doesn't matter if it looks like the best stock in the world, or if CNBC just said, sell mama's rings and buy this stock. It does not matter if it's up 6% or we've had 3+ candles in the direction of my trade. I just don't trade it. Another thing is I only take 2 to 1 or better reward risks. Again, why would you take high risk situations relative to the reward? I won't do it. And another aspect of that, another one of my rules is if my goal is $1,000 a trade, why the hell would I take a trade that I don't think has the potential for $1,000? So it might have a 10 to 1 reward to risk ratio, but if that 10 doesn't come out to my goal for the trade, it's no trade. It's a waste of my time. Something else that I do is I only buy near proven support, and I want to be above it. And I only sell or go short near below proven resistance. So those are just some examples. Again, we cannot go through all of them. And my rules, again, are only specific to me. I don't think that they all will apply to you. You shouldn't think that either. We each have our own personalities, our own psychology, and those are the things, focusing on yourself, learning about yourself, that will help you become a better trader. It's not some fancy indicator. It's not some proprietary setup. Those things are truly secondary, in my opinion. It is knowing yourself, having rules to protect you from you, having goals to guide your trading, and then following a process and having the tools to execute that process both efficiently and effectively. So again, for anybody who's watching this later, there are you can pause the video and copy down those links, but those are the links that Sherry has sent out. Again, my goal setting spreadsheet and the trading rules, that spreadsheet's in Excel, but you can do it with whatever you want. And then some simple options rules that I use for my simple options trades, and that I'm talking about directionals or spreads. Okay, let's get into the things that the sexy things that people really come to see, that I think are really the tail of the dog, not the dog itself. I only trade 2 setups. One of them is a tight consolidation within a trend, and that could be either bullish or bearish. And secondly, a small pullback within a trend. So let's talk about what those mean. This is what they look like for a tight consolidation in a trend. Again, it's going to be very tight. I like to define 3% max high-low range for a minimum of 5 candles or bars, if you prefer, as a tight consolidation within a trend where that 17 EMA has been rising. What I'm looking for, again, is that strong trend. As I said earlier, I'm a trend continuation trader. So I'm all about catching a trend while it rests and just looking for it to continue. And I'm not looking to pick a top or a bottom. I'm not a knife catcher. I can't pick a top either. I just want to take my slice out of that trend. And so that's what I'm looking to do. I'm looking to find that rest after a piece of the run of the trend. And again, that tight consolidation is just rest, not even really profit taking, just rest. I want to see that support has held, or on the bearish side, that resistance has held. And then I want to see that the bulls have stepped in, or the bears have stepped in. In other words, it looks like the trend is starting back into continuation. There we go. So this is what it looks like on a chart. I honestly can't remember which ticker this was, but you can see that we had a strong trend underway. Then we had a magnificent run that actually pulled us away from the trend line. And now we've got a tight consolidation happening there up above. And it's clear that one level defined by that black line is holding as support, and this is truthfully set up just perfectly. Then I will use LTA, live trading alerts, to identify this, and then alert me when this breaks, when the bulls actually step back in. What do I define as a tight consolidation? If you look at the gray lines, I'm not sure if you can see them or not, but the gray lines on those charts are 2.5%. So we've got about a 3% range as the maximum high-low across the last 5 candles. And then I would be looking for a break out of that above the high of that last 4 or 5 candles to show me that the bulls have stepped back in and the trend is starting to resume. This is how I find it. Years ago, I flipped through charts, and I am not kidding you one bit. I flipped through thousands and thousands of charts every single day. I went through the S&P 500 over and over and over again during the day, and then I would go through the Russell 1000 every night, looking for specific setups. And that is incredibly inefficient. Not everybody has the temperament to do it. Other people will just go to a service and have people hand them a fish as opposed to learning to fish. So I flipped through charts for years and years and years. Then I spent a great deal of time teaching myself to program and writing my own scans. And again, that only got me scans, that only got me things that were in the general criteria that didn't tell me that the bulls or the bears have stepped in. So I created live trading alerts, and this is what you have a picture of here. The configuration for this particular alert window is looking at the S&P 500 and the CBOE top 400 stocks based on options volume, or tickers based on options volume. Together, that's about 700 tickers. Of those, then I apply scan criteria to it. I'm looking for a strong bull trend in this one, and there are about 100 of the tickers that pass that. And then I'm looking for that tight consolidation. And again, I define that as about a 3% range, high to low over the last 5 candles. I trade dailies, but you could use any time frame you wanted. And you could use a much more complex or completely different setup if that applies to you. I've got about 1,000 existing scans created. If I ever have a user that comes to me and says, well, you don't have exactly what I want, or I don't know how to do this and I can't figure out how to do it with some combination of the 1,000, I'll write a new scan for you to do exactly what we want to do. But I find that 18 tickers in this particular setup, out of that about 700, are doing the setup that I want. And then I'm telling LTA, okay, anytime we have a ticker, at this moment there are 18, but at any time during the day that we have a ticker that passes those criteria and is also showing a new high of the last 4 candles on daily, I want to be alerted. And then we'll get this alert window, and you can see in this particular screenshot that I had that MOH was doing that. Before that, CEG did it 3 times in a row. And that's telling me that the bulls have stepped in to a ticker that is setting my setup or in my setup the way I want. Let's go to the other side, the bearish side. Same setup, different market direction. Again, we've got a strong bearish trend. We have a tight consolidation where a level of resistance has clearly held for the last, it held a support there and 1, 2, 3 times as resistance. And we've got that tight consolidation over the last 5 candles. I'm looking for us to be breaking below the lowest low to show me that the bears have stepped back in. Once again, once upon a time, I would flip through charts just hoping to stumble across this, tickers that are doing this setup. And I didn't have defined what this setup was. I had it in my head. Oh, this is, basically what it was. And that causes you to get a lot of trades that you take that are not exactly what you want, but they're close. And it never got me to exactly the setup I was looking for at exactly the time. In this case, the bears were stepping in. So that's why I built LTA, to solve those two problems together. Let the computer do the monitoring of the ticks and not me. So in this case, I'm looking at all US LTA symbols, about 4,600 tickers there. And of those, we're then looking for, on this particular day when the screenshot was taking, we've got that strong bearish trend underway, and about 1,700 of them past that criteria. And then we have a tight consolidation, about 621 past that criteria, but only 23 tickers past both criteria. And okay, so we've got 23 tickers that are doing that bearish setup that I want. When do I want to be alerted to them? I don't want to see those 23, and try to flip back and forth between them, figuring out when they're time to buy. I want them to alert me whenever they're at a new low on the day, in this case, the low of four candles, 4 bars, whichever you prefer. In this case, on a daily, so the low of 4 days. And you can see in this screenshot that this will have a stream of trades when the market provides them to your desktop, and SCSC met those criteria and printed a new 4-day low whenever that alert came through. So that's the first setup that I trade, that tight consolidation. The second one is a small pullback within a trend. It's very, very similar. The only real difference is that I'm allowing a little profit taking within that trend. And I mean a little. I'm not looking, if you're a fib trader, I'm liking a 23% or 23.8 or less pullback. I'm not looking to give back a huge amount of the trend or the last run of the trend. I just want to see that it's small profit taking for the particular trend, and then that the bulls are stepping back in or that the bears are stepping back in. Again, I'm looking for that strong trend underway, a little bit of profit taking, which is normal and which is required for a healthy trend. I want to see that support on a bullish trade or resistance on a bearish trade has held, and then that the bulls or the bears are stepping back in. Here's an example of, on the bullish side, what I'm looking for. As you can see, we've had a long-term trend underway. It tends to go run up, pull back, run up, pull back. That's just the way stocks move. In this last run we've had, and then we had a small pullback relative to this. I can't measure this off of the screenshot, but my eye tells me that's 23.8 or less. And we held support. We held this level that has been acting as support and resistance in the past. So it's a key level of support or resistance. We've held it, and the bulls have stepped in. But again, I don't want to be alerted to the situation. I'm not going to buy it just because that held. I want to see that the bulls have stepped in, so I want to be at the high of the last 2 candles. Again, that's what I'm doing here in LTA. I'm defining my criteria, so I'm going to look at all US tickers. I'm going to then say I need to have a rising average. I use the 17, and I think I said it has to rise 5 candles, each and every candle for 5 candles. I want to have a user-defined trap, this candle, and a trap just means that price is between 2 moving averages. I tend to use the 3 EMA and the 8 EMA. The 8 EMA is what I call the T-line. That was coined by a friend of mine, Rick Sadler, but it just stands for trigger line, and it's just a fancy term for the 8 exponential. And then I want to have a white candle today. So those are the criteria I'm looking for. And out of that 4,600 tickers on this particular day, there were 17 at that moment in time that were identified as passing all of those criteria. And then I'm saying I want to be alerted when one of those is also printing a new daily high of the last 2 days. And you can see that we had some that went ahead and did that for me. Using LTA allows me to focus on the trade plan, to focus on my rules, and not focus on flipping through charts or getting recommendations from Billy Bob at the barber shop, or Fred from the trading service, or somebody else on Twitter. The computer monitors the market for me and brings me trades only when they're doing exactly what I want and triggering the right price action for me to know that it's time to enter. All I need to do is pull up AVY and see where to set my stop, where to set my profit taking order or two, and go from there. This is what it looks like on the bearish side. Again, we're doing the same thing, a strong bearish trend. We have now had a pullback up into resistance. That resistance level is held. Again, it held as support a few times and has held as resistance a couple times. And now I want to be alerted by LTA when I'm getting the bears stepping back in. So this is what my setup looks like. In this particular one, I'm looking at all US symbols. I'm then saying I need a falling average. Again, I've told you I use the 17. There's nothing magic about the 17. That's just the one that I've found that I like. If you like the 20 simple, the 50 simple, the 3 forward weighted, however you like, whatever moving average speaks to your trading style, to your psychology, we can use that. I use the 17 EMA. I require it to have been falling, I can't remember if it's 5 or 10 candles. My bear for this particular alert window, I'm then looking for a bear trap, which again is just a small, on a bear side, a small pull up within the trend. So price is back up above the 3 EMA and still below the 8 EMA. The low, or in case on the bear's case, the high of the current candle has touched the 8 EMA, but price is back below that. So I know that the pullback, I think, is over, and I've got a black candle. On the daily chart on this particular day, there were 32 at the time I took this screenshot that passed that set of criteria, and then I told it, alert me when one of those that passed these criteria, and that could change all day long. Every 60 seconds, these scans rerun. And then on a tick-by-tick basis, anything that's passing all of those criteria that's also a daily low of the last 4 candles, print me an alert. In this case, Pfizer was the most recent one that gave me an alert. I didn't mention it earlier, but you get a snapshot. That particular icon tells me it's all US LTA tickers. And this gives me a snapshot of what that universe is doing. At that particular time, 64% of the 4,600 tickers were red, and the average of all those tickers is down a little over 0.5% on the day. So that tells me this is a bearish market. This is the one I should be going short, and Pfizer is doing the setup I want, and it's showing me the bears. I'm only giving alert because the bears are stepping back in. Again, I can focus on just setting up my trade with my stop, my profit taking orders, and away we go. So that's what live trading alerts about. I've told you earlier, you've got to have goals, and they've got to be logical goals. They've got to be realistic goals. And you've got to keep increasing your goals to stretch yourself. You've got to have rules that fit your psychology. Excuse me. And you've got to have the tools to enable your process to work the job, to do your trading in a consistent and ever improving way. Live trading alerts is a tool to help you do that by helping you quantify your exact criteria for a trade setup so that you know every ticker you're alerted to is not close to, it's not kind of, it's not sort of what you're looking for. It is exactly what you're looking for. And it is doing exactly what you want it to do at the time you want to enter those trades. So that's what LTA is about, live trading alerts. I do want to put out this special offer, and then we'll do some, sorry about that, we'll do some live examples and answer any questions you have. But I'm offering you a 14-day free trial of live trading alerts, a little bit different than most software, in fact, any software that I'm aware of. You have access to me every day the market's open. And I'll schedule times outside of that if we need to. I've got customers all over the world, so I understand that. Within reason, we can work something out. But I will work with you. You need to be able to answer 2 questions to get the most out of LTA or to really do your trading. That first question is exactly what characteristics, what criteria define the exact trade setup you're looking for, whether that's a scalping or a day trading or a swing trading, position trading or long-term investment. Exactly how do you define that setup you're looking for? And then secondly, exactly what price action tells you that tickers in that setup are ready to buy or ready to sell. So I will help you set LTA up to find exactly what you need if you can answer those 2 questions. Again, take a 14-day free trial. I'll be more than happy to help you get it set up. And then after that, if you decide to buy, there is no commitment, no credit cards, no nothing. I just need your name and email address so I can send you a download link and the license number for the trial. But then if you do decide to buy LTA, I'll give you 50% off the first month's subscription fee. It is on a month-to-month basis, and we don't make you make a commitment for years at a time, anything like that. If you decide after a month that you can't make it work or the market is turned against you or whatever, you can always cancel. So with that said, let's go ahead and get to some live examples. Let's see, kill that. That didn't work very well. There we go. There we go. So here are the 4 alert windows that I showed you earlier. In today's market, we've got a bullish market and a bearish trend. So there's not going to be a lot of action on these particular setups. This is not the market that I want to be trading in. But let's look at what we've got. Here is the properties of this one. Again, I told you we've got a rising average and I've got a tight consolidation. This one happens to be looking at the CBOE top 400, the Q100 components, and the SPY components, so the S&P 500 components. There are only 4 tickers that are in a trend. That's because the market's in a bearish trend. So only 4 tickers that are in that bullish trend, which I've defined as the 17 EMA, having to rise each of the last 5 candles on a daily chart. And then there's 19 that did that. And then the user-defined consolidation, I'm looking at the last 5 candles, can have a maximum rise of 2% and a maximum high-low range. That's a closing rise of 2%, and a maximum high-low range of 4%. So a tight consolidation within that trend. Only 4 tickers are passing that set of criteria right now. This will link to whatever charting package you use. I think we have 8 or 9 different packages we set to. I actually use TC2000. There you can see we've got that trend underway, and there's your tight consolidation within that trend. So you can see they're doing what we want them to do. But then I'm also telling it only alert me when one of the tickers that is passing that criteria is also giving me a new high of the daily candle. And again, MOH Molina did that at whatever time this alerted earlier today. So that gives you an idea of the examples. Let's see if we can't find a bearish example as well. Very similar. This one happens to be looking at a different universe. Instead of the S&P, CBOE, and QQQ, this is looking at all US tickers. Again, the bearish user-defined trend, same as before, and the user-defined consolidation within that bearish trend. And then that gives us 20 tickers because the overall market's been trending down. And then give me an alert only when one of them is also at a new low of the last 4 candles. And we can see, let's stay on top here. You can see that, well, at whatever time this alerted earlier, it was giving us that new low. And the same thing with ORI. I think the market turning from red to green today has taken a lot of these out. That's what this little orange dot tells me. It's been more than an hour since I've had an alert on this particular alert window. So you've seen how LTA works. I've talked about the importance of goals and so forth. I've made the offer to you, and I've given you the free handouts of the goal setting sheet, my trading rules, and my options trading rules. Are there any questions that I can answer for you?
Now's the time to ask, folks. You got a whole 2 minutes to ask Ed some questions. Otherwise, you'll have to email him. I did put all the links there, including the offer. You need to take advantage of that for sure. How much for a monthly subscription is Jean's question.
Sure. After the initial month, which again, you would get 50% off, it's $97 a month. And again, that's on a month-to-month basis, so you can cancel at any time, but $97 a month.
Nice. And oh, Robert Scott said it's great presentation. Prezzo.
Thank you. Thank you. Thank you.
Any other questions?
Okay, well, if you want, anybody can reach me at ed@livetradingalerts.com. If you have, you're afraid to answer or you didn't have time to type it in, ed@livetradingalerts.com. Be happy to work with you.
Robert says, Ed, do you have a set time of day that you like to trade?
I don't trade the first 15 to 30 minutes of the market, but outside of that, not really. I trade when LTA alerts me to tickers doing exactly what I want and also moving the direction that I want them to move. So I let the computer decide for me if the market is doing what I want and the ticker is doing what I want. I focus on the individual trade itself.
Nice. So John's saying, so Ed, I could write a scan that actually is my trading plan. That's pretty cool.
Yep, that was the idea. That was the starting point of this software. So thank you.
Awesome. All right. All right. Well, we're right on time, guys. So thank you for being here. And Ed, as always, I can't wait to have you come back again. And everybody, you need to take advantage of these offers because these are real deals, you know, and I mean, like, people are the real deal. So anyway, I hope you have a great day, sir. Thank you. Have a good one, and we'll talk to you again soon.
Okay.
All right. Bye now. All right. Now we have our next presenter is waiting in the wings. And I'm just going to do a little bit of housekeeping here. You should be able to see that our last speaker was Ed Carter of Live Trading Alerts. And our next speaker is Marina, the Trader Chick Villatoro. She's going to be talking to us about understanding market language to spot high probability trades with technical analysis. Can you make your presentation titles a little bit longer, because I'm just not sure that really going to tell us what. No, I'm kidding. I'm kidding. But seriously, Marina's been with us a few times, and I really love it when she comes and shares with you guys. She specializes in helping people day trade with confidence. She's been trading financial markets for years, using trial and error to gain insight. And when Marina began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, which is the basics, reading and understanding the market language. It speaks to us loud and clear, and being able to understand it will take your trading to a whole new level. So thank you for joining us, Marina. How are you doing today?
Hi, can you hear me?
Yes. Where in the world are you?
I am in Guatemala. How about
I
you?
am
Where are
back in
you?
Guatemala. I am in Ontario, Canada.
Oh, nice. Okay. So I
And
don't have access to everything. Oh, now I do. Now I do.
and do you like to have the questions on the fly for
Yeah, I like
okay,
to do it on the fly for sure.
doing
Yeah.
it. All on you. You got it. Take it away.
And are you guys able to see my screen?
I can
Let me
see the trader chick.
All right, awesome, awesome, awesome. All right, hi guys, hi everybody. Thanks again for having me. I love joining here. Some of my favorite times. So where is everybody from? I see there's quite a lot of people in the room at the presentation. I like to know, you know where I'm from, and you know where Sherry's from, right? So where are you guys coming in from? I'm coming in from Guatemala. What about you guys? I want to know which part of the world we're all kind of jumping in here. West coast of Florida. What is that, like St. Pete area? Thousand Oaks, California. I think Thousand Oaks, is that near Berkeley? I'm not really sure. Placentia, nice, by Disneyland. I lived in San Diego for a while. Oh, Cape Coral. I love it there. I love the west coast of Florida. It is such a hidden gem. Europe, Czech Republic. Oh, Prague is my absolute favorite city, I think, in the world. New Hampshire. I was actually in Prague when it was still Czechoslovakia. That's how long ago I was there. Yeah, it happened. Czech Republic separated right after I came back. Southern California, nice. Cedar Grove, New Jersey. My parents live in New Jersey, but much north. They live in North Bergen, actually. And New Hampshire, we have two people from New Hampshire, Penny and Jean. Nice. And Mike, you are from Tennessee. I love it. I love seeing where you guys are all from. And thank you so much for being here, because, you know, I know that it takes a lot for us to show up to these presentations. And I really reward you guys, because we have things going on all the time, right? Life in general. So taking this time out to really apply and learn is amazing. And even though my goal is for you guys to learn today, the whole point of doing these presentations is that you learn what you need to learn, right? So I am here to answer your questions. I always say day trading, it is not a spectator sport or anything in the investing world, right? So asking questions makes you more proactive, interactive, and really learn, rather than just being sitting in the bleachers and just letting, you know, the words pass you by and you're not really taking it in. You've already taken the time to be here. So take it to the max, learn something. And I always tell my kids, even if you learn just one thing, that one thing can literally change everything. And I know for a fact that you will learn several things from me, but if you could take that one thing and really implement it and run with it, I want to know your results, because I can guarantee it will take your trading to the next level. All right, so let's begin. Today I want to talk about understanding market languages to spot the high probability trades with your analysis. Because if you're not understanding what is happening in front of you, you're not going to be able to follow through on those high probability trades and just continue not fully understanding what's going on. And believe it or not, it's a lot simpler than you think. And this is me. This is Marina, the Trader Chick. And like I said, I am an expat. I live in Antigua, Guatemala. This is me and my two favorite little people. And before I became a day trader, I was actually a fitness instructor. And the main reason I bring this up is because a lot of people believe they have to be math whizzes or financial understanding or coming from an economic background. Totally untrue. I was a fitness instructor and a travel writer. I still am a travel writer. And now I hire a personal trainer to do my fitness. But that's just my personal thing right now. So I'm also trilingual. And the main reason I bring this up is because, okay, for one thing, I am a refugee from the Soviet Union. I arrived to the United States when I was really small. So Russian is my mother tongue, but English is my main language. And when you're small, when you learn a new language, you're not even really learning it. It just becomes so instinctual, right? Because as you're still, when you're really young, you're still learning even your own mother language words. So learning a new language is just kind of a continuation, right? But when you learn a new language in your later years, as I did when I learned Spanish in my late 20s, it's a whole other process, right? Like it's an actual process. You need to translate everything in your head. You need to do, you need to show up and do it consistently. You have to be committed to it. You also need somebody that is there to really help you, because if you're going to be just, talking to somebody, their patience really pays off. And when I began trading, I've been now doing trading for over 10 years. I could not get it. The first couple of years, I was really struggling until I finally decided. I literally just walked away. I was losing money and I had like 10 indicators, 3 charts going on. I mean, I was a mess. And I just kept on failing. And I finally walked away, took some time off. And when I came back, I said to myself, I'm going to remove all of that stuff, right? Because it's just noise, right? It's literally like walking into a room of 6 fluent Spanish speakers and trying to pretend that I could understand what they're saying when I'm barely even at the hola, mi nombre es Marina, right? And that is a real issue for a lot of people who are learning to trade. And I realized that when I came back and just started focusing on bare naked charts and just putting in one indicator at a time, that it was literally like learning a new language. The market actually speaks to us, and that is the beauty of it. And once I realized that the market was speaking to me, I was understanding what it was saying, that's when I began to trade really well. And that's my goal for you guys today. So if you look at it now as learning a new language and listening to it rather than trying to predict what the market is telling you or trying to beat it, you are going to completely enter a new realm of trading. I absolutely guarantee it. Now, the coolest thing about trading, and today I literally only trade with one chart. And that means I could trade anywhere in the world, because travel for me and my family is not a luxury, it's a necessity. And we literally travel 3 to 4 months out of the year every year. So I can't just stop working. So I'm able to trade from anywhere I go. And if any of you have ever participated in live expos, I used to do quite a lot before COVID and the pandemic obviously hit. I used to do money shows, traders expos, and all that other stuff. So today, the coolest thing about being online is that I am able to speak to a lot more people, and that's the beauty of it. So I actually have the entire presentation for you guys in a free document. You need to go to makingofadaytrader.com. Just type it in, makingofadaytrader.com. Boom, and you will get your free presentation that you could go along with this. And I know that Sherry also sends out the replays, so you could then go back at your own pace so you really get it, okay? Go to makingofadaytrader.com, get the presentation so you could totally follow along. Now, let's dive in. What are the basics of day trading? Look, we're going to be learning 4 basics, right? And I'm telling you again, if you even get one and implement it tomorrow, I guarantee you'll go in a totally new up-leveled direction. So look, we forget that when we learn how to drive a car, that it's an actual strategy, right? Today, when we sit down, buckle in, put the key, put the car in drive or in first gear, depending on what you're driving, and take off. You first reverse, obviously, when you have to go back. And then when there's a stoplight, you have to stop. You weren't born with that information, right? That is a strategy. That is a strategy that you are taught. When you're seeing a yield sign, you slow down. When you see a stop sign, you stop. This is not stuff that we're just born with, right? This is a strategy that you learn. And it's the same thing with the markets, okay? So now when we jump in the car, a lot of it is automatic, but it wasn't when you first got in. And that's what I wanted to teach you guys today, are those basics that will completely change everything. First and foremost, your indicators. I get so many people who have like 10, 15 blinking, crazy, going all over the place indicators. And I'm like, so which ones are you using them? You know, which ones are being helpful to? I don't know. Well, this guy told me to use this one, and this YouTuber said this one. I'm like, okay, that's good for them. How about you? And that's what we do, is we break it down to see which indicator really works. And after I came back, removed all my indicators, I came back to 2 indicators. And indicators really work. They really help you. Okay, like I said, guys, everything I'm going to be talking about, please go here right now, makingofadaytrader.com, so that you are able to get my presentation to go along with me. All right, now the market movement and the breakdown of a trend. Look, we all know that there are 3 trends that are out there, right? We have the upward trend, we have the downward trend, and then we also have the sideways trend. So the sideways trend, we understand it logistically, right? This is the sideways trend, but the reality of the sideways trend, and maybe you know it as the consolidation area, transition area, the chop, indecisiveness, slowdown, exhaustion pattern, I don't care what you call it. It's all the same thing. This is literally the trader's biggest enemy, because I can guarantee, I could bet pretty much anything that that is where 90% of your profits of the day, if not even more, get taken away. And this is what I want to talk about today, how to avoid those areas, okay? So again, downward trend, upward trend, sideways trend. You have to understand these trends to really be able to, to be understanding what is happening. What is an upward trend? Pretty basic, right? Each pivot is higher than the next pivot, right? It's a bull market, market trending up, market going up. This is where you enter to go long. This is when you are buying. What does that mean? It means you're entering at a lower price, exiting at a higher price point, and you're taking the profit in between. You're going long, you are buying. The downward trend, literally the opposite. Each pivot is lower than the other pivot, right? This is where you short the market. This is where you sell. What does that mean? It means you enter at a higher price point, exit at a lower price point. If you guys are sitting here and thinking, well, I'll never short the market, I'll never do that, then you're not really trading, okay? Because the majority of day traders most likely make the majority of their money on the downward trend when they're shorting the market. And we are focusing on technical analysis, so it really makes no difference if the market is going up or if the market is going down, because we just want to make sure to get in where we can profit the most, all right? Shorting the market, all right? This is super important to understand, the bear market. Now, let's talk about that consolidation area, those transitional areas, the sideways market. Literally, I call it the trader's worst enemy. So we need to learn how to spot it and to avoid it. So what does this mean? It's a consolidation market, right? It's a channel. It's where there is absolutely no direction. Look at that. Do you really want to go in here? No, absolutely not. You don't know where it's going. You have absolutely no idea. So why do the majority of traders lose money in these areas? First and foremost is trading, it's an emotional activity, right? It's emotional. So when we learn to understand it logistically, we can stay out of a lot of bad decision making and a lot of bad trades. What happens here when we see this consolidation area, this is what happens. We start to give ourselves stupid stories. All right, I don't know if you guys know what a story is, but I'll give you a really quick example of a story. You meet somebody that you really like and you think they're really cool and you're getting along with them, and all of a sudden they're like, hey, you know, I have a party coming up in a couple of days. I'd love for you to come. What's your phone number? So I'll invite you. I'll send you the information tomorrow. The next day comes and goes. They never write you. What's going on then? You start to create stories in your head. You start to tell yourself, oh my God, did I say something wrong? What did I do? Maybe they spoke to somebody else who knows me and that other person said something bad about me. And you go on with these negative stories. Normally these stories are usually negative, right? It's hard to, I don't know why we go there. Anyways. And then 2 days later, this person calls you up and they're like, oh my goodness, I'm so sorry. I dropped my phone in the toilet. All my numbers were lost. I had to take it and all my contacts were gone. Finally, I got them back, right? So the story you created was a lie. So that's what stories are. So now we're sitting in front of this kind of market movement and we are telling ourselves stories, right? And there's usually two types of traders. Every person in here is going to fall into one or the other kind of a trader. One trader is the one that thinks that the trend is your friend, kind of a trader. And the story they're going to tell themselves is, you know what? The market has been going up all day. I'm going to go long when they're seeing this consolidation area. The other category of traders is the contrarian trader. And what they're seeing is, you know what? The market's been going up all day. It's got to correct. I'm going for a short. That's the story they're telling themselves. Here's the reality. Both of those stories are lies. Why? Because the market is going to do what the market is going to do. And the only thing the market is actually doing is going flat. So you need to get out of that story. You need to stop telling yourself those stories and literally stay out. When you're seeing this kind of action, stay out. Save yourself the money. Don't come up with a story. Okay, what you can tell yourself right now is, you know what? The market doesn't really know what it's doing. It's decision time. I'm going to wait and see what actually happens. Because it doesn't matter how strong the trend is, it can always change. And you don't want to be on the wrong end of the trend, right? And these consolidations, they happen quite a lot, right? Enough to be able to stop you out before they continue in an opposite direction. So you need to understand when they are happening. How do we do this? We market off with areas, right? The market respects areas, and we, as a retail, individual traders, need to respect it just the same. What are areas? They are the support and resistance, and they are so important. Guys, you need to draw in your support and resistance areas. You cannot be putting in a mental support or resistance area. Why? Because it's literally like putting in a mental seatbelt on your baby and thinking you're going to be able to protect them when there's a car accident, right? Every single platform out there, does not matter which charting platform you use, every single one has a drawing tool for you to be able to distinguish these areas. I call these areas the safety gear for traders, right? This is like us putting in our seatbelts, because you don't want to be putting in your money into an area that has been hit over and over again, because it can stop regardless how strong it's going and change direction. So let's talk about these areas. What exactly is a resistance area? It's the ceiling of the market. It is where the market has been going up, trending up, and now it's hitting over and over and over again 4 or more times, right? It stops the market in its tracks. It stops, and you need to not be in that market once you have defined that area. What is a support area? It's literally the opposite. It is the floor of the market. It is when there's a downward trend and the market is hitting it over and over and over again. All right. This is a support area. You need to draw these areas in, guys, to protect yourselves. Every single platform has a drawing tool. I don't care if it's just the line, but you need to have it. Mental anything does not work in trading. It's literally like putting in a mental stop. We all know how successful that is, right? Yeah, it's successful enough for you to lose all your money every time you say you're going to be putting in a mental stop, because your ego will always win out. Always, right? That is the most important thing of all. All right, so here we go. This is a channel. If you don't have your resistance and support areas drawn in, how are you possibly going to see that this is a channel, that this is the most ugliest behavior? I would never put a dime, a penny of my hard-earned money into something that is like this. But when I don't put in my resistance support areas, I'm also missing out on one of the most probable trades out there, the breakout trade, right? So look at this. Do you guys really want to be in it? I can guarantee I could put all my money in that everybody in this room has lost money in these types of channels, these areas, the chop, whatever you want to call it, right? I mean, look at this. Even though this is a pretty wide channel, you don't want to be in this kind of a market. All right, it's important to understand. Now, how do you recognize when this is starting to happen? And that is so simple, and everybody in here can do it regardless of the instrument that you are trading, as long as you have your platform, right? Your charting platform. And that is reversal areas and divergences. They are literally the trader's maps to the shift in directions and trends. So what are they? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. These are so important and they're so easy to understand, right? Right here, you're first starting out with a double top and then it goes into a triple top. So what does that mean? It's already the beginning of a resistance area. So I've already drawn that out and I'm already prepared. Okay, so when you have when you have reversal patterns, it is not 100% indicative that it's going to reverse. What it is, it's a high potential for sure, but it's certainly not telling you that it's going to be reversed. You need to wait until the reversal actually happens. But in the meantime, you are seeing that the market is slowing down and that it's losing strength. And you don't want to be putting in money where there's no strength, right? So what are divergences? I personally use the MACDs. I know that a lot of people use RSIs. It doesn't matter which one you use. You just have to understand how to use them together. So my MACDs to me are the holy grail. Here you can see that the price action is going upward. Meanwhile, my MACDs are telling me the exact opposite. What does that tell me? It means that the market is losing its strength. Okay, and again, I'm going to repeat it 100 times. I don't put money into the market when it's losing strength. I want it to be strong when I enter the market. Now, when I'm seeing a double bottom like this and divergence, this is golden. This is the key. I'm looking at this and I know that the market is going to either go into a flat area or transition. And I don't get in until I have real confirmation, and then boom, look at that massive confirmation. This is right here, the zero line on the MACD is showing me very little strength, but once it flies above here, that's when I know it's great. Okay, and I use divergence with reversal patterns, but I also use it here. You see, it's already starting to tell me that there is going to be a slowdown, right? Even though it's totally going down here, it's becoming flat here. So I'm already aware that the market is starting to slow down and lose its strength. All right, and that is so important. All right, guys, let's put all this together. Make sure you go to makingofadaytrader.com. Everything I told you about is in this document right here, totally free. Go there right now. All right, let's talk about breaking out of areas. Like I said, the most powerful trade out there is the breakout, but you can't figure that out if you don't have your support or resistance areas drawn in. Okay, it's a breakout. What exactly is a breakout? I'm going to break it to you down really simple. Imagine you live here, totally south, and your best friend, sibling lives north of you, right? And they invite you to a party. You've been to the house a million times. You hop in your car, and you get on that highway and you're going, right? You're full of confidence. You know where you're going, but all of a sudden there's this huge construction site, and the construction worker is sending you to a detour, right? And he's telling you to go to an area that you've never been in, some little tiny village. Google and Waze has not caught up to the detour yet. You're freaking out. At least I am. I totally freak out. I don't know if they're going to reopen the road. I don't know if the detour signs are going to continue. This is total indecision area, right? This is that channel. Do I want to be putting money in that I'm going to make it to my sister's house? Absolutely not. Okay? So it's the same thing. You guys have to understand this. But then all of a sudden, the construction worker says, all right, the road is fixed. You guys can get back on the highway. And boom, you're headed in the same direction that you've known and totally have confidence in. That's that breakout trade. All right, you're driving one direction. All of a sudden, road closed. You're totally freaking out. Am I going to get there? You're in total doubt, indecision. All of a sudden, they reopen and you are flying past again. That's the breakout. This is how I see the breakouts. Again, though, if you don't have your areas drawn in, how are you ever going to be able to take these trades? Not possible, right? Not at all possible. So here, this is how, oops, the next trade here I want to give you is a bonus setup. I call it the initial reaction trade setup because, again, using our support and resistance areas, we also want to know when a new trend is completely happening, because at the beginning of a new trend, that's usually when you have the most amount of strength, right? And you can see here with the MACDs, look at this amount of strength. It's amazing. And you want to be able to get in on it as early as possible, right? And I use my EMA areas, my EMA lines for where I enter the trades, because you don't ever want to just market entry. You need to have an order waiting. You need to tell the market, this is where I want to enter, because that's telling the market also that you understand what's going on. When you're doing market entries, you're literally telling the market, you know what, I'm an amateur, I'm not really sure what I want to do. And what that tells the market, you know what, I'm going to penalize you. And that's called slippage. Slippage takes 25% of your initial entry. So if you enter at $1 and you're going long, it's going to enter you at $1.25. All right. So remember that. It's really, really important. Again, go to your makingofatdaytrader.com to get your cheat sheet. All right, let's do a little bit of live analysis. I know that somebody just asked me, what is my time frame, right? Gary, you asked me what my time frame is. So as you can see here, I personally trade the E-minis, which is the ES, is the S&P 500 on the futures market. And if you can see right here, I use the 610 tick chart. What does that mean? I don't use a time frame. Okay, so the 610 tick chart is literally for each candle. I have 610 transactions that are happening in the live moment. So right here, you can see how many transactions are left, but it's also showing me right away the volume, the volatility, because the volume indicator is notoriously known to be the most lagging indicator out there. But I don't need to use it because I'm using a tick chart and I get to see how fast, how much volatility is actually happening in the moment. Because at the end of the day, the only thing we really care about is how many transactions are going on. Because if it's super slow, I don't really want to be in it, right? I don't want to see paint dry. So that's really important to understand. Okay, so this is my time frame. So if you don't have access to a tick chart, the majority of charting platforms do give you access to it. But if not, so it's comparable to about a 1 to 3 minute chart. Because I am a scalper, that means that I go in for really quick in and out trades, usually lasting between 30 seconds to 3 minutes at most. Okay, so here we have a pretty significant resistance area, right? It started around here, but then it has kind of continued on around here, right? Right here, we have a pretty significant area as well. It's a double bottom, right? And look at this divergence here, right? It's barely inclining here. It's completely straight here. So I'm already reading it and understanding what is going on there. This is a perfect example of, look at this divergence, right? Right here. And then it breaks divergence, and that's where I'll be looking to enter. That's how I read the charts. I love it. Here we go. Perfect example of a resistance area. And look at this. This is where I would be with going in to a breakout trade with my eyes closed, because it all broke out here. Look at this massive, massive strength on the MACDs, from the MACDs, I should say. Well, this is my MACDs from the 0 line, right? Look at that massive strength, breakout trade. This is gorgeous. And again, guys, every single platform gives you drawing tools. Okay, this particular platform gives me quite a lot. I know that the majority of them give you almost as many. So there's no excuse for you not to draw in your areas, right? You need to draw these areas in, because everything happens to the left. What does that mean? It means when you are in the live market, your hormones are going crazy, right? Your what is it called? Like, it's this adrenaline rush that you're getting, right? So a lot of times we can get blinded by it, but when we've done the homework, we've done the work and drawn it out and know, okay, this trade that I just took everything is exactly what I wanted it to do, you sit out with a lot more confidence, right? That's the most important part about trading. You have to do the work beforehand, right? You have to know exactly what is going on. By the time you take that trade, you know that it's a good trade. All right. And that's literally the key there. Okay, so let's continue with the presentation. Now, we have absolutely everything we need to take action, right? Everything. We have the presentations, we have these kinds of summits, we have YouTubers, we have books, podcasts, you name it, right? But at the end of the day, how do you know you are doing it right? How do you know you're actually doing it right, right? All of this is great, but the real question you're probably saying to yourself is, how do I really get started? And this is not from beginners only. Seasoned traders who have been trading for ages are asking me the same thing. How do I turn this around and be more profitable consistently, right? Because you're not sitting here in this presentation and killing it out there, because the honest part is you are seeing some challenges and you want to get past them. So that's the thing. And a lot of times, I'll be honest with you, it's literally lacking the basics, right? It's not just because a lot of times is what I've noticed myself, and I've spent thousands of dollars on my own education, is that a lot of these classes, academies, chat rooms, when you enter them, they expect you to know the basics, right? They never explain the basics. And that's literally what happened to me. It's like when you first hop into the car, right? When my son right now is 18 years old. When he first started to learn how to drive a car, me or my husband were like, okay, hop in, buckle in, put your gear into first, make sure that the clutch is down, put your foot on the brake. He was like, wait, what is gear? What do you mean by first gear? Where's the clutch? He didn't know what those were. And those are basics to me and my husband at this point. So we went back and taught him. Today, he hops in just the same. But if you don't know the basics, if you, for the first time ever, got into a car and somebody's like, all right, buckle in, this is going to save your life. You've never seen a seatbelt. You have absolutely no idea what it is. How are you supposed to buckle in? Nonetheless, this is the thing that's going to save your life. Okay. And I see this happen over and over and over again with a lot of beginner traders. They just jump in. A lot of them don't even know how to use their own platform, and they're putting in shorts when they want to go long, and then they're losing money. And it's just a whole disaster, right? And they're literally just donating money to the market when it could be really easily fixed, super easy to avoid, and to be able to do really well in the market. Look, I spent over $20,000 on my own trainings, like with academies, mentorships, summits. I mean, you name it. And I still struggled for years losing money to the point where I literally lost almost $4,000 in 5 minutes. And after a long time, I just said, I can't do this anymore. I quit. I walked away. But the reality is, and I can guarantee every single person in this room right now, you guys have been bit by the trading bug, right? And it never stops itching. And do you know why? Because deep down inside, we know that we can do this. We are this close from actually doing it. It's just those little tweaks that can make all the difference. And that's when I decided to come back, and I went back to the basics. Like I said before, I literally had 3 charts, 3 monitors. I shouldn't say charts, monitors, 10 indicators. I literally took 2 monitors and and they were new, put them out and literally donated them to my garbage men. I deleted all of my indicators and slowly started to check each one to see which worked best for me. And I am down to 2 indicators, 1 chart, 1 monitor. That's what I could do. Now, one of my students the other day said to me, he was like, you know, Marina, your teaching strategy is very similar to Coach John Wooden. And I'm like, who's Coach John Wooden? So of course I went and looked him up, and he was a legendary basketball coach. And I mean, legendary. And his entire teaching philosophy was, when in doubt, get back to the basics. This man, I mean, he is not an ordinary guy. He had 10 NCAA championships, 88 other championships. I mean, this guy trained the superstars of basketball. However, every time they started a new season, he would go back to the basics. how to tie your shoe, how to roll up your socks, how to dribble the ball. Why? Because it doesn't matter what you think you know. It doesn't matter how many championships you know. If you forget these little things because you're getting cocky or you think you know so well, you could get out there, your shoe is not properly tied, boom, falls off, twist your ankle, and you're sitting out for the entire season. All your other knowledge doesn't matter. Okay, so you need to get back to the basics because that's what's going to change everything. And today I have a special offer for only participants that have joined today because I actually really value you guys and your time. And this is only offered to you, nobody else. I have my introductory course that I created called Bootcamp for Day Trading. You could do it on any apparatus, desktop, laptop, tablets, phones, and it is for any instrument, Forex, stocks, futures, crypto. You can apply it for any instrument because at the end of the day, we learn the charts. And that's what it's all about. You could do as much reading and as much talking as you want, but if you don't know how to read the charts, that's never going to happen. And that's exactly what I focus on in this course. So all of this that I'm going to be showing right now is $97. You can actually go right here, right now, bootcampfordaytrading.com to be able to see everything that I'm going to be talking about. Bootcampfordaytrading.com. What can you get for $97 today that will bring you on the same return of investment? Let's think about this. You want to go golfing. You know what? I don't even know any golf courses, even in Guatemala, that cost $97 for the day anymore. Honestly, $97 can't even get you a day on the golf course. And what if you want to take out your family? Oh my goodness, in Guatemala, me and my family, the four of us, used to be able to go and have these amazing dinners for less than 50 bucks. Today, $97 barely even gets four of us just regular meals, and I'm not even talking about wine. Okay, $97. So let me break it down for you. What your $97 one time, this is not an ongoing fee. One time, this is what you'll be getting in the course. First of all, simplifying your day trading package, and I will be going over with you the whole tutorial on setting up your platforms because I have to admit, almost 80% of my students that come to me have lost money because they had no idea how to set up their platform and were too anxious and too eager and too hasty and started to get into the live market without even understanding how to set up their platforms. We are going to pass all that so that you guys can start the important thing, and that's trading. So you have total control of the charts and can enjoy the actual trading process. Then we're going to learn the dissection of the markets, understanding the uptrending, sideways trend, downward trend, understanding how to spot those reversals and divergences and really using it because this will make all of the difference, okay? Understanding these small things will literally be your biggest aha moments. That I know for a fact, okay? Then we're going to be really talking about how to spot these areas that really could stop you out immediately. Support and resistance area, understanding how to use divergences so that you can see where there is strength in the market or slowdown and knowing when to get in, right? Because divergences, they scream to us, they tell us, hold on, there is slow down right now. There's weakness in the market. Wait until the market tells you otherwise. And we learn all of that. And then we apply all of that to be able to spot the most important trades of all, the breakout trades. If you guys don't know how to put in those areas, how to spot when there's that consolidation, how are you going to be able to take those breakout trades? And those breakout trades are almost a 90% probability of a profit, right? And also, there is also that fake out breakout. And I know that a lot of people enter those fake out breakouts and lose money. We will learn how to avoid those areas as well. All right, so you need to understand how this all works and to be able to spot them so you can get in. Plus, you will have unlimited access to this curriculum. All of this is valued at $1,600. Okay, you'll get the trader's workspace. We'll work together on your platform, dissecting the trends, respecting those areas, the power of the breakout, and unlimited access to the curriculum. Here's what some of my students have said, and I have students from all over the world because that's literally the beauty of trading, right? You could do it from anywhere in the world. It's amazing. All right, Michelle, I just finished the boots camp. Best money I ever spent. I totally understand what I'm doing now. You are the only mentor I know that checks works. This is absolutely amazing. Thank you for all that you have done. I am so enjoying this boot camp. I am learning every day. But I want to share something really important with you guys. What did I say in the beginning? How do you know you're doing it right? Why is it that athletes, CEOs, and other people can work with a coach to go to the next level, and a lot of us don't believe that we should? Well, I am offering included in that $97, that one-time fee, $97, one-on-one, 1 month mentorship and live coaching with me, unlimited. That is included in that. So once you get it, me and you will work together with your charts, unlimited, one-on-one, because the mentorship is literally what's going to take you to the top. And on top of that, I have a free live trade chat room. It's me. It is not a moderator or somebody that I hired. It is me. You will get 30 days free membership into that live trade chat room where we take trades together. We're watching how the market moves, implementing everything that we are learning on top and separate from the mentorship. Okay, all of this is valued at $2,600, but for you guys, only $97. So go here right now, bootcamp4daytrading.com, bootcamp4daytrading.com. Go here right now and you will see everything that goes with it. Again, this is a one-time payment. It is not recurring. You are not going to be paying again at all. One time only. Bootcamp4daytrading.com. Bootcamp4daytrading.com. Here's everything that you're going to be getting. 30 days one-on-one mentorship with me. 30 days in my live trade chat room membership. Setting up your platforms, reading the curriculum together, and working on it together one-on-one. And the reality is, this is your wake-up call. I know for a fact because I've been there. $97 is not even the price of a full trade the majority of you are taking, right? So for $97, you're going to get this incredible education on working with me, and it's less than a trade. Okay, the cost of this course, all that comes with it, will bring you 10 times the return on your investment so that you could do 100 of these dinners after you've done this course. But here's the thing. I only have space for 25 people because of my mentorship. So I only have spaces for 25 people. Now, go here right now, bootcamp4daytrading.com, and it's going to bring you right here to this order form. One-time payment, $97. And if you really want to do less, you can start at $59, 2 payments of that only. But again, you get access to everything right away. Bootcamp4daytrading.com. So go here right now, guys, bootcamp4daytrading.com. Let me know if you guys have any questions or anything right now. Bootcamp4daytrading.com. Bootcamp4daytrading.com. Let me know if you guys have any questions. Here, you can go right here, bootcamp4daytrading.com, and it will bring you to right here. Okay, bootcamp4daytrading.com, $97 one-time payment. So let me know if you guys have any questions, and thank you so much, Sherry, for having me. And I just want to say a huge thank you to everybody for being here and opening yourself up to new information and being ready to actually put it into use. So I hope that you guys got a lot out of my presentation, and anything you guys need, I'm here. Thank you so much for joining us.
Thank you, Marina. Thank you. And I'm looking forward to seeing you back again as well. So everybody, you need to go there. The links are in the chat. And I wish you the best, lady, and I shall see you again soon.
Yes, definitely. Thanks, everybody, and have a great rest of your day.
Thanks.
Bye, everyone.
Bye now.
Bye.
All right. Okay, there's a lot to unwrap here today. We've got one more speaker coming up, and I'm going to bring him out now. That was Marina Villatoro of the Trader Chick, and I mean, there's so much there. You should really take a look at her offer and take her up on it if you possibly can. And our next speaker is Jeff Tompkins. He is with Altos Trading. He's going to be talking to us about the secret to beating the market using relative strength. And let me just move over to there. I'm about to do some housekeeping. Jeff Tompkins is a professional stock options futures trader and hedge fund manager with over 20 years of experience trading in the markets. Jeff's successful career led him to create Altos Trading LLC in order to help others achieve financial freedom through consistent and profitable trading strategies. Thank you so much for being here, Jeff. How are you doing today? Let me make you the presenter, and you are unmuted. Okay, there you go. You're the presenter now. Do you like to see organizers so you can ask questions and get answers on the fly?
Yeah, that'd be great. Thanks, Sherry.
All right, we'll do it. All right.
Thanks for having
I was
me.
worried. I was worried you might be, like have a little of a lisp or something.
Oh, I lost you there. Looks like we. Oh, there.
No,
Back.
that was me. I was trying to make a joke. Clearly, it
Oh, you
didn't
cut
work
out.
out.
I missed your joke. I
Didn't
apologize.
work out. Anyway, it's probably better. It's probably
Well, I'll
better
give
that
you a courtesy laugh.
way. All right, well, you take it away, and thanks for being with us.
All right, thanks so much, Sherry. Welcome everybody. Thanks for being on today. Great to be here. So as Sherry mentioned, I'm going to be covering how to use relative strength and a bit of a unique twist on relative strength. If you've ever used this methodology in your trading or investing, that I'm going to reveal for you, to you guys today. So pleasure to have you. We're actually going to start out with hopefully you guys can see my screen, by the way. Let me know if you have any issues seeing my screen, but we're going to start out with a fun little video. So we'll kick it off. All right. Well, as we just saw, the margin between victory and defeat can be very, very small, and we're going to tie this into the concepts of trading and investing, and how we can use some various tools and methodologies to give us an edge in our trading and investing to improve our consistency and our overall success in the market. So that's going to be the topic of our time together today. We'll spend about 45 minutes with each other, and want to leave time for questions at the end, hopefully as well. So there aren't any lingering questions. Read a quick disclaimer to you before we get into everything. We know that trading securities and options involves risk, and of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options. We need a broker to trade securities and options and must meet suitability requirements. We're going to go over some past results with you on our session based on the system and methodologies that I'm going to be sharing with you today. And just know that any performance figures that we share, while they may be based on actual trades or hypothetical results, we don't guarantee that past results are indicative of future performance. And of course, due to the time critical nature of trading, brokerage fees, and activity of other subscribers, we don't guarantee that anyone will mirror the results or anything that we share in our educational presentations. All right, so I'll give you a little bit of background on myself real quick before we hop into the education. Again, I'm Jeff Tompkins and have over 20 years of experience trading stock options and the futures markets, and received professional training at the trade desk at Morgan Stanley as an intern, and founded the Altos Trading, and then the chief investment strategist at Altos Trading. We currently have over 60,000 members in over 100 countries across the globe. As Sherry mentioned, I'm also a hedge fund manager. So I manage money for my clients at Altos Capital, and I'm the founder and manager of some of the highest performing options and stock alert services out there on the market. So just a little bit of background on myself so you know where we're coming from and what we're getting into. So by the end of our session, you'll discover how to gain that extra 1 degree edge that can put you ahead of some of the best traders and investors in the world. And a lot of people are surprised that there is often a relatively small degree of edge or difference between a very successful trader or investor or someone who may be struggling. So maybe you're just starting out, maybe you're kind of in that phase where you're trying to figure out what works for you, or maybe you're a seasoned pro and you've been trading for a long time. And like me, we still encounter difficulties and challenges. And like most professions, it's important to have continuing education and development. You don't want to just reach a level and then stop. So I applaud all of you for being here for that reason, trying to continue your education and learn more about the endeavor of trading and investing. So that's what I'm here to help you guys with today. So the reason we're going to talk about this 1 degree difference, and as you saw in the video at the beginning, when water is at 211 degrees, so it's obviously very hot. You wouldn't want to stick your hand in it, but it's not really doing a whole lot. It's just sitting there. And I like this analogy because number one, it's analogous often to stocks or other asset classes within markets. But it also goes to show, again, the difference between a successful trader and a struggling trader. So think of it like a stock that's just sitting there, and often we see stocks in sideways channels or ranges, or they're just spend a good amount of time not doing a whole lot, and then all of a sudden they take off, right? And so it's kind of like with boiling water, where it's sitting there at 211 degrees, not doing a whole lot, but as the temperature rises just 1 degree, the water will boil. And that 1 degree difference is incredible because it takes something that was just sitting still with virtually no power that can then create steam and power a locomotive train. So the reason, again, I like this analogy is a relatively minor difference in a catalyst or a variable can make a big difference in the result. So again, it's kind of like when a stock starts to outperform a major benchmark index or sector and then skyrockets. And this is where relative strength comes into the equation. So if any of you have learned about relative strength or maybe used some relative strength indicators, we're going to talk about one of those, and it's the most commonly used one, the relative strength index or RSI indicator. And we'll give a little bit of background about what it is if you haven't used it. And then we're actually going to look at some of the problems with it, because like most other indicators out there, they have their advantages, but they have their drawbacks. This is an interesting one because I think it has the potential to give us really good information and give us an edge, but it has some major drawbacks to it. And so that's what we're going to look at, and then we're going to solve that problem. So again, if you haven't used it or aren't real familiar with it, the relative strength index is a momentum indicator. So it's available on virtually any retail charting or broker platform, and it measures the magnitude of recent price changes to evaluate whether the security is overbought or oversold. And it's displayed again as an oscillator. So that's basically a line graph, and it's a bounded oscillator. So it has 2 extremes, a maximum and a minimum, which are 100 and 0 respectively. So it can't go beyond those numbers. It's been around a long time, and as I mentioned, it's widely used. It's used among hedge fund managers, institutional traders, and the like. So it's very widely used and closely followed. Originally developed back in the 70s by J. Wells Wilder, and a great book if you haven't read it, New Concepts in Technical Trading Systems, which is where he introduced this indicator. So in terms of interpreting the indicator, and like most indicators, there's different interpretations and ways to use them. The traditional way to interpret the RSI is with, again, an overbought or oversold evaluation. So a level or reading that is 70 or above is generally considered overbought territory. And based on that, we may expect that eventually buying will dry up and sellers will come in and push the price of the security back down. In other words, what we call a reversal or a correction. And then an RSI rating of 30 below often indicates an oversold or undervalued condition. So a lot of times people will look for low RSI readings and then look to enter on a long position at a low reading, thinking that the security is overbought and should eventually go back up. So that's kind of the most common way that it's used. I mentioned there's a couple problems with that, right? So we're going to go over those and then we're going to solve them. So problem number one is stocks can remain overbought or oversold for extended periods of time. So if you've ever used the RSI indicator or really any momentum or trend direction indicator that's telling you that something is at an extreme or is primed for a reversal, and you went ahead and took action on that, but then it kept going in the direction that the indicator said it wouldn't. And I'll raise my hand, I've been in that boat plenty of times, and it's very frustrating, but it's reality. That is the problem with a lot of these indicators, and that includes the RSI. So I like to use the old John Maynard Keynes saying, the markets can remain irrational longer than you can remain solvent, right? So even though it may appear a market is overbought or oversold, it could really stay that way as long as there's enough buyers or sellers driving it in that direction, right? So that's one major problem with the RSI, and why it often gives misleading signals, like a lot of other indicators. So let's just visualize an example of that. This is a chart of Tesla with the RSI indicator plotted at the bottom. All right, so you'll notice that I have the overbought and oversold levels marked there, 70 and 30. So as the RSI rises above the 70 level, saying that the stock is overbought in October, November timeframe, well, interestingly, the stock is at a relatively high price compared to August, September, early October, yet the RSI, while it goes into overbought territory and dips back below, goes back above again. And then it spends another 2-3 months in overbought territory. But the key here is what's happening to the stock. The stock is taking off. So it went from around $40 a share up to over $190 a share in the period of time that the RSI was telling us Tesla was overbought, right? So it gave us misleading information, right? If you were looking for a reversal back down in overbought conditions, it wouldn't have worked out so great. You would have been trading against the momentum of the actual share price. Here's another example. This is Best Buy, BBY. So again, RSI indicator plotted at the bottom of the chart. And we'll notice that it spent a number of months bumping up against that overbought reading, right? And the stock was in an overall uptrend at that time. A little bit choppy, a little sideways at times. And then in July and August, as it's hitting new highs, the RSI indicator is telling us the stock is overbought, way overbought. In fact, it went up almost into the 90 level. But what was happening to the shares? They were going up, right? In fact, they continued to go up past that high in August when the RSI dropped. So it really did not give us good information in terms of telling us whether Best Buy was overbought or oversold. In fact, it gave us completely false information. Here's another example. This is Amazon, right? So we have all these readings in June and July of overbought conditions in the stock. Well, what's happening to the shares? They're going up, right? So they went from around $2,400 a share when the RSI started to give us overbought readings, and peaked at over $3,500 a share just a couple months later. And the RSI number even got into overbought or oversold territory. That would have given us an indication that there were the oversold conditions and it might make sense to buy on a continuation of the uptrend. So This is a big problem that you'll encounter with the relative strength indicator or index. So we're going to make some improvements on the old RSI indicator because, as I mentioned at the start, the ideology, the theory behind it is good, but there are some faults. And I'm going to go into the next major fault here shortly. But this new approach on using relative strength to gauge whether an asset is going to go up or down is far more effective. And I built a whole system around it, and I'm going to teach you the system on our session today. It's a 4-step process, and I'll show you how I do it. So we're going to look again at Amazon, and look what's happening when we use a different approach on the relative strength. So basically, a positive number, which is indicated on my chart as a green histogram, tells us the stock is performing relatively strongly. All right. And in this case, you can see when the RSI was telling us it was overbought, this was actually giving us accurate relative strength information as the share price was going up. Then as the shares start to kind of stall out and move sideways in mid-October, the formula quickly identified that underperformance, and it coincided with the sideways price action of the shares of the stock, right? So that strong uptrend that was there in May, June, July was no longer there. The stock is no longer performing on a relative basis strongly, and I'm going to explain that. Okay, so much better than the old RSI indicator. And that leads us to problem number 2, which is really the, to me, the biggest problem with the RSI indicator and virtually any other indicator out there, is that they basically compare the current price of the asset to its past price. So you're comparing itself to itself. And that may make more sense for some indicators or methodologies, but when you think about it for relative strength, that completely goes against the purpose of the relativity component of the indicator, right? Why would we compare the current price to the past price when obviously if the current price is higher than the past price, the RSI indicator is going to go up and tell us it's overbought. Or if the current price is lower than the past price, the RSI indicator is going to go down and tell us that it's oversold because the price is lower than it once was. So all you're doing is just comparing the current price to the past price, and that is going to create the biggest lagging problem that you could probably ever encounter by using an indicator. So it only measures the current strength of a stock relative to itself in the past. And so that's very problematic, right? And surprisingly, not a lot of people think about this and accept it and then try to find a solution to it. But that's what we're going to do. So the solution, and wouldn't it make more sense, is to identify a top performing index or sector. So rather than compare the asset to itself, let's look at another related index or a sector or an industry that's performing strongly, and then compare the asset that we're looking at trading or investing in to that. That's the true, definition and purpose of relativity. We're actually comparing it to something else, not to itself. So that's where the 1 degree difference comes in. And you'll see here shortly, it can take a losing system and give it the steam to be very successful and help you identify stocks that are ready to take off, not ones that have already taken off and made their move only for you to jump in and and then get a false reading from an indicator and have it reverse on you. All right, so again, that's the approach most people take. So the 1 degree difference, let's talk a little bit about that. So often when a stock begins to outperform a major index, an industry or a sector, it goes on to make a big move up. So markets are all correlated. They're interconnected, right? They're all impacted in one way or another by each other. So relativity in the markets is a crucial component and a very important thing to understand when you make trading decisions. And so if you've ever wondered, why is this stock just kind of sitting there? And yeah, maybe there's a catalyst like a strong, quarterly earnings release, or a major FDA approval for a biopharmaceutical company, or something that very briefly occurs that drives the price of the stock up quickly. But other times there might not be any real identifiable catalyst, and that happens a lot, right? So the stock just takes off, and you're like, well, why is the stock going up? I don't really get it. So that's where relative strength comes in. It helps us identify those opportunities when there's really no obvious catalyst. And it helps us identify when a security goes from underperforming to overperforming or outperforming relative to a benchmark index or sector. And the beauty of it is it does it in a timely way. So it does it on the actual day that it occurs versus the old RSI indicator telling us who knows how long later, and whether it's even accurate information, whether something is overbought or oversold. So I found and proven to our members who use this methodology that these opportunities can actually far outperform the market. And I can tell you as a professional money manager myself, and you can certainly look this up to validate it, but it's very difficult to beat the S&P 500 index, and fewer than 1% of all professional money managers beat it on a consistent basis. It's that difficult. All right, so I think any edge that we can get, and like I mentioned, it just doesn't take a huge edge. It just takes a little bit of a that 1 degree difference, that extra little degree that boils the water to find these. And so that's the formula and the system I'm going to show you. And as we get into that, a lot of people say, well, how does this work? How's it been working in 2022? And by the way, I'll share some recent results from 2022 with you. That's the great thing, and it's like the old cliche from Jim Cramer, there's always a bull market somewhere. So that's the other beauty of the system. Even when markets are down or we're in full on bear market conditions, there are always assets that are going up, right? So this also can help us find those types of opportunities. And we found some really nice ones this year in the bear market even. All right, so we're going to look at a little comparison side by side with the formula, which I'm going to give you here, by the way, in a second, and the old relative strength index. All right, so this is, again, chart of Tesla. So we just looked at this same chart, but this time we've got, we're going to be using the new formula, and we're going to look at how it did relative to the old RSI indicator. So right around third week of September, and this is obviously not this year, but the stock prior to that was just basically moving sideways, right? It was kind of channeling between 40 and 50 bucks a share roughly. The RSI is starting to rise up, right? It's moving up into the overbought territory. But around the third week of September, the new twist in the RSI that I'm going to share with you here shortly picked up that the stock was starting to outperform the S&P 500 index. And at the time, the S&P 500 was in a very strong uptrend. Right, so we're comparing Tesla to a benchmark, in this case, the S&P 500 index, that is in a very strong uptrend. It's performing very, very well, right? So we're kind of picking the cream of the crop, right? We're looking for the best of the best. The formula identifies that third week of September. You'll notice, though, that the RSI continues to trend up in the overbought territory, right? Well, the stock ended up going up over 1,800%. And the formula continued to tell us that it was outperforming, while the RSI was telling us that it was overbought, right? This is another example, Teradata, TDC. Stock was moving, in between a downtrend and a sideways channel for a number of months, October, November, December. Then towards the latter part of January, right, the stock starts to outperform the S&P 500. Again, this is not 2022. This is, I believe, January last year. So the stock started to outperform the S&P 500 when the S&P 500 was a top performer across the board. So that's our benchmark. And the shares went up 125% in just a couple of weeks. So you can see the timely nature of that as it relates to using a lagging indicator like the old RSI that also gives us misleading information. This is an example, because I do use this methodology in my own trading decisions, as well as in my hedge fund. This is an example from my hedge fund, and full disclosure, we don't own shares of Futu Holdings anymore in the fund. This is from the past, but used this methodology to buy shares of Futu in my hedge fund, and did that because the security started to outperform the S&P 500 when that index was in a strong uptrend. So I was looking for alpha or edge in this opportunity as it related to the broader index that was performing very strongly, right? And in this case, the stock went up 380% in just a couple of months, right? So it gives us very timely, and as I mentioned, to the day, that particular security outperforms whatever we're comparing it to, whatever our benchmark is. So those are some visualizations on charts, so you can kind of get a feel for what it is and why it's different than the old RSI indicator. So now I'm going to give you my 4-step process. So step 1 is to identify a top performing industry and sector. And don't worry, I'm going to walk through each of these steps so you know how to do this. So just for now, these are the steps, and we'll come back to step 1. Step 2 is screen for stocks within that industry or sector. Okay, so this is where we kind of start to have to roll up our sleeves and do a little bit of heavy lifting and some legwork, right, to get into the weeds and sift through all of these opportunities that might abound within a particular industry or sector. And then we need to apply the formula. So we need to compare the relative strength of each stock that we pick within that benchmark to the index or ETF that tracks that industry or sector. And I'll walk through some examples for you. And then the final step, step 4, is kind of the timing component of it. It's where we select a stock that changes from underperforming to overperforming. So this is where would be like on that particular day, we've identified this opportunity. And if we want to make a trade or an investment off of that opportunity, we can go ahead and do that on the next day. And by the way, the beauty of this is it's all done after market hours. So we don't need to be doing this, during the day while the market's open. We can do our homework, after the market's closed and have our opportunities ready for the next morning when the market reopens. All right, so we're going to walk through the steps. So first, I'll give you the formula and kind of explain it. It looks a little complex, but it's really not. So there's really just 2 data points. The stock price, and by the way, we're just using the word stock price. This can be applied to any asset class, or whatever you're trading, as long as it has a price that moves, then it can be applied, right? But for the purposes of the formula, we're just going to say stock. So the stock price, so that's data point 1, and that's basically the asset that we're looking at potentially trading or investing in. And then we have data point 2, which is our reference price. So that's what we're comparing it to. So for instance, if we're looking at, let's say a retail stock, and the retail sector is performing very strongly, we might want to select a retail ETF, that would be our data point 2, to compare to a retail stock, let's say Nordstrom, for instance, right? So those are our 2 data points, the stock or the asset we're looking at trading and what we're comparing it to. As far as logic, if the stock price is greater than 0, which obviously it should be, if it's not tanking or dropping to 0, we don't want that. And then the reference price, of course, being greater than 0, we're going to get a log value. So basically, to get the log, we take the stock price, again, that's data point 1, divided by the reference price, data point 2. So our relative strength number is the average of the log value. So again, that's what we just did, the stock price divided by the reference price, minus 2 inputs. So we use an RS length of 90 and an EMA length of 3, okay? And then we multiply that by 100. It's going to spit out a number, and it's basically going to be a positive or a negative. So if we get a positive number, it's going to tell us that that's data point 1, or the asset we're looking at trading, is outperforming data point 2, our reference price. That's relative strength for you right there. That's the formula. So then how do we find the top performing sectors, right? We know the formula, and there's a lot of ways to do this. This is, I think, the quickest and easiest way to find top performing industries and sectors. finviz.com. So I don't have any affiliation with this site. It's just a great resource that you can access via the web at finviz.com. You don't need a paid subscription or anything of that nature to do what I'm going to show you. you just need to go to the Groups tab. All right, so when you go to the Groups tab at the top menu bar, it's going to bring up the relative performance of, and you can sort this, I think, by different metrics, but whether you want like an industry or a sector or a broader, index, or how you want to compare it. But I just use the default. And then what I'm looking for is an industry or a sector here that is within the top 3 and positive performance over 3 to 4 time periods. So I look at the 1 week, the 1 month, the 3 month, and the half year. All right. And so if we look at, and by the way, this is not current, so don't look at this and be like, oh, wow, some of these industries or sectors are really performing strongly. I'm going to go jump in. This is not a current snapshot. This is from the past. And at the time that I took this, industrials was a top performing sector, right? So if you look at the industrial sector, it was number 1 for the week, it outperforming by nearly 4%. And this is compared to the S&P 500 index. They're almost 5% over 1 month, almost 12% over a quarter, and over the past 6 months, over almost 30%, right? Outperforming. So this is a strong relative performer. So wouldn't it make sense to take a strong relative performer and then select the best of the best within that and find one that's even outperforming a top performing benchmark industry or sector? So that's the juice of it right there. So that's actually step 1. So we kind of went out of order there, but that's how you find the top performers. All right, so let's look at some examples. We saw that industrials at the time was outperforming, right? So it was a strong performer across different industries and sectors. So we want to start looking at industrial stocks, right? And so we can, run scans in our platform or whatever tools we're using to look through industrial stocks and then compare them to, for instance, an industrial ETF, right? So, I just tend to go with like the spiders or some of the main ETFs. Like if we were doing energy, for instance, and I was looking for energy stocks, I would want to compare it to the XLE, the energy ETF. So we compare it to a comparable ETF. In this case, BLDR, I identified BLDR as outperforming the industrial ETFs, right? And in or around the 3rd week of July, prior to that, June, it was underperforming. The formula says it's not outperforming, right? It's not outperforming your benchmark, data point 2. But then it began to do that around the 3rd week of July. And the stock went up 113%, and it continued to outperform for a number of months, right? So it went from kind of going in a downward trend, a sideways channel, to a very strong uptrend. And the stock actually more than doubled in just a matter of months. This is another industrial example. So again, industrials performing very strongly at the time. We start looking through all the basket of industrial securities, and we find Deere, right? And Deere was also kind of moving sideways. It's cut off the chart there, but you can see from the red, the formula was pumping out a negative number. So it wasn't until, again, around the same time, 2nd, 3rd week of July, that the formula turned positive and said that the stock is outperforming the industrial sector. And in this case, Deere went up 122%. So a lot of these can make really big moves. They're not all going to make big moves, right? Things can, and the markets can change at any time. But the beauty of it is, that day you're selecting the best performer that you can find, right? The best one that you can find out of the best or one of the top performing industries or sectors. So you're giving yourself the extra edge and weeding out a lot of other bad opportunities, right? Okay, so generally with these, as far as entry, if I'm going to take a trade or a position off of one of these, I'll just generally jump in the next day if I'm going to go long the shares. As far as managing the trade, I like to use a two target profit system, right? So, and there's a reason for this. So target 1, I set it a minimum 5%, maximum 10% of the initial entry price for the first half of the position. Reason being, a lot of these, and based on experience, and we send these picks to our members on a weekly basis, a very high percentage just go on to make a 5% move rather quickly. I think last week we sent out 4, and 2 of the 4 made a 5% move within a few days, like 3 days. So a lot of them do that. So that's a good initial profit target. Some take a little bit longer, and then some really go on to make big moves. So they, as I showed you in some of the examples on the charts earlier, can go on to make triple or even quadruple digit moves. So those aren't as common, obviously, but when they happen, we want to try to capture as much of that move as we can. So for the second half of the position, so this is kind of a scaling out type of methodology, we use a 10% trailing stop. So that's the kind of the trade management part of it. We have a lot of members that apply this to options. So we're a big options company. We teach a lot of different option strategies and things. So we have members that use this methodology with options, because with options strategies, particularly directional option strategies like buying calls or selling puts or vertical call spreads or bull put credit spreads, if you guys trade options, you'll recognize some of these. Timing is very critical. Not to mention the magnitude of the move, right? That is also very critical. They've all it's got to come together and happen right at the same time before you reach expiration, So if you do trade options, it can be a great system for picking stocks and building option strategies around them, particularly directional option strategies that have a big time critical component to them. And our initial profit target that we set at 5% above the entry price can make big differences in the premium of the underlying option, right? Oftentimes a 5% move, of course, based on variables like implied volatility and other things, can often result in a doubling of the option premium. So this is just a quick example of a relative strength options play. And we don't send out options alerts. We just send out, and do the research on the picks, but most of them are optionable. So if you wanted to trade options, this is kind of what it could look like. This is an example of Apollo, which started to outperform the S&P 500 in April. Again, not of this year. This is a past chart. But you can see there that the timing was pretty accurate, because the stock took off from around 27, 28 bucks a share and really exploded. So one way that some of our members might play this is to simply buy a call option on Apollo, which was starting to outperform on April 16th of 2019. Sorry, it wasn't. It was actually, geez, now a few years ago. Time flies. So on that particular day, the stock closed at 29.66 a share. So one way to play these with directional options would be to buy at the money strike calls. So we could look at the 30 strike calls, which at the time we're trading for $1.70 per contract. So in this example, we'll use 10 contracts, which would require an outlay of about $1,700, less any commissions or fees that your broker might charge. So that would be our initial investment. Of course, that's on 10 contracts. It can all be scaled up or down depending on your account size and risk tolerance. In this case, the relative strength formula did a really nice job at identifying and timing the move and outperformance on a relative basis of the stock, Apollo, right? So 6 days later, it already hit its 5% target, and it resulted in nearly 100% move in the option. So you can see there that the call premium just about doubled. So the open P&L would have been $1,650 on 10 contracts. But you can also, and we teach this, to also use the scaling out method with options. So unless you're just trading one contract, in this case example, we're using 10, if you scale out, keep 5 open and manage through expiration based on the relative strength of the security, a lot of these, again, can go on to make big moves. And as we saw on the chart, Apollo did that. So the additional 5 contracts would have picked up an extra $4,225. And on that one play, the $1,700 investment would have turned into a $5,050 a profit. So that's a 297% return on just a simple call play on one of the relative strength picks. So again, we have a lot of members who do options trading around these opportunities. So now you guys know that when a stock gains that extra 1 degree and begins to outperform a top performing index or sector, it often starts to boil, quote unquote, right? And often results in explosive moves to the upside in the stock. So I've revealed to you my 4-step process for identifying these opportunities. I'm giving you the formula, how to find the high performing industries and sectors, and how to apply the formula to those to find opportunities. But of course, it does take a lot of time and work, especially when we're looking at, and typically I'll go through run scans through a minimum of 5,000 stocks every single week to find the best of the best. So it does take time and legwork to do this. So I've given you the tools to do that on your own if you choose to do so, but I'm also offering to do the heavy lifting for you. So I mentioned that we do that for our members on a weekly basis and send them out. So we do go through the whole 4-step process and find these opportunities and typically send out around 5 to 10, depending on market conditions. Right now we're probably sending out more like 4 or 5 a week. So some weeks we'll have more, some less, but on average. And we also send those out via your smartphone as well, if you prefer not to just receive them by email. And they're basically picks, and I'll kind of show you an example of what it looks like, but we're doing all the heavy lifting, identifying these for you and giving you the pick. You can then decide, how you want to trade it. Again, most of them are optionable. So if you like options trading, you can trade options around these. Or maybe you have other indicators or systems that you're using that you want to apply to that. We have members that do kind of all the above. So totally up to you. But what you get is you get our best picks right to your inbox every week. In fact, we're sending another one out here shortly this evening. I've been doing the research on it today. And you don't have to sit and watch your computer all day. So again, it comes out after market hours via either email or priority text message. You get the instructions with the profit target levels, right? And you're going to get about 15 to 20 per month in current market conditions. So in each alert, you get the ticker symbol, so the stock, the current closing price, and again, typically you would just enter the shares at the open price the next morning, unless like it gaps way up and hits our profit target right off the bat, which happens sometimes, but rarely. And you get your profit target levels, right? And the full analysis. So what we're comparing the picks to, what's our benchmark, and then whether it's optionable or not. So we'll let you know as well. And again, probably 95% of the picks we send out have options that trade on them if you do trade options. So here's some examples of recent alerts. So how has this done recently? The market's been in this terrible bear market. These are actually across even last year when the market was losing steam. XPEV went up 8% in one day. Vail went up 11% in 4 days. We issued the pick on DocuSign that went up 12% in the very first day. US Steel went up 16% in only 1 day. TECL went up 25% in 12 days. And these are examples of picks that we sent out in 2022 when the market was tanking. So when we're in this steep downtrend in bear market territory, these stocks are going up very large percentages in just a matter of days, right? So these are recent examples. In fact, last week, we sent out 3 picks last week. All 3 of them are up from last week, even when markets have been selling off over the past 3 weeks, right? And just finally started reversing today. So there's an abundance of opportunities. Not all of them are going to be huge double, triple, quadruple digit winners. But the ones that, and these are real examples, by the way, they're not hypothetical, that we've sent to our members have been very successful, right? And we've been sending these out for years now. So I've given you a lot of the tools and methodologies behind what we do here at Altos, and want to invite you to continue with us and provide the alerts to you on a weekly basis. So if you don't want to do all the legwork and spend the time to do this on your own, and maybe you want to do both, maybe you want to try it out and also see how we're doing it and kind of get a feel to learn a little bit better, right? And we're here to help with that as well. So we put a special package together today for the event called our relative strength signals. So it's 12 months, an entire year of our signals. So you're going to get lots and lots of signals over the course of a year. Normally we retail this service at $1,499 for the year, which is still extreme in value because you can obviously see the potential behind it. You get the priority text alerts, so we're throwing that in. Normally that's a $299 service, but it's also going to be included in the package, as well as access to our Facebook group. We have somewhere around 900 members in our group that trade not just this strategy and methodology, but a lot of our other ones as well that you'll get access to. It's a private group. Normally our membership is $199 for the year, but we're throwing that in for free as well. If you do trade options, we're gonna toss in some really great training. And the reason we're throwing this in the package because I think options are a great tool to trade around this methodology, as I mentioned. So we throw this in as well as training on trade adjustments for option strategies. And normally that course retails for $900. And again, it's all sent out after market hours. You don't have to day trade. Current market conditions, you're going to get about 15 to 20 opportunities per month. So you, of course, don't have to take all of them. You can choose which ones you like, and then learn with us, right? So we're here to help you step by step to become successful in your endeavors. And then we're going to throw in a couple bonuses. So we are also including our professional trading series online course. So I've taught you on our session today one of our great strategies, but we have many, many more. And we teach those in our professional trading series online course, a variety of equities, ETF, options, futures, and Forex strategies. So that course normally retails for $595, but we're throwing it in as a bonus, as well as my latest ebook, which I think How to Create Risk-Free Trades is a great, basically shows and teaches some money management tricks that can be used alongside the service as well. So we tried to put together a package that was complementary of all of the components of it. So this is a money management book that shows how to mitigate risk in trades and even take trades and use certain money management tricks to really drastically reduce risk or even eliminate it from a trade in some cases. So that's going to be yours as well as part of the package. So obviously big retail value on the whole package at over $3,500 if you were to buy all of these things from us individually from our site. We are going to throw this out at only $49 a month just for the event today. So I think that's actually incorrect. It's far more than 84% off the retail price, but 49 bucks a month, a little bit more than $1 a day, you get access to all of this. And you get all of it for life. The trade alerts are for an entire year. The rest of it is for life, right? So if you want to take advantage of the special offer today and join us and see how our relative strength picks, which again, by the way, are coming out again this evening. They typically come out Tuesdays through Thursdays, but we have some lined up for this evening. If you want to get those and try it out for yourself, altostrading.com/RS49 is the place to go. And we do limit this to 25 seats. Reason being is we don't just send alerts out. We actually strive to have really good customer service and help our members also be successful. So we don't want to just give you something and say good luck. And for that reason, it takes our time and effort and energy. And as much as we'd like to take unlimited members, we do always cut off our membership promotions. In this case, we're doing that at 25 seats. So once those are gone, it will go back to the retail price, guys. So once you join, you're going to be added to our members list. You receive confirmation email within the next few hours, and you'll get the alert tonight that we're putting together as well with the picks for tomorrow. And then you get access to our members portal and of course get your first alert. And you'll get the two special bonuses that I mentioned, our professional training series and my new ebook, How to Create Risk-Free Trades. And we're going to throw a guarantee in as well. If you don't make at least your membership fee back in your first 90 days, we'll give you a refund, yes, but we're also going to give you an extra year of signals because we believe so strongly in this. And maybe timing wasn't right for you, or you got busy, or you got distracted. We still want to give you the chance to be successful. So even if you don't make money with it and don't do anything with it for the first 3 months, I'm going to give you an extra year of the signals on the house. Okay, again, that retails for $14.99. So there it is, guys. If there are any questions, I'd be happy to take those. If we don't get to them, here's our contact information again with the link, phone number, email. You guys can contact us if you have any questions. Sherry, anything that came through?
I am feverishly fixing everything on the screen. And you guys need to go ahead and screenshot this so that you can contact Jeff and take him up on this great offer. Like, this is a great offer, Jeff.
Yeah, and I'll put that up here again for you, just so everybody can see it.
I'm just putting your email there. I did give them the altostrading.com/RS49, but I typed it wrong first, so now I have it fixed. Sorry about
Okay,
that.
no problem.
I'm gonna go there, support at altostrading.com. What a day. Wow. Thank you so much for being with us.
It was a pleasure to be here as always. So thank you, and thanks everybody for attending. I hope you got a lot out of it, and welcome to everybody who's joining us. Keep an eye out for the alert
And
tonight.
we have a ton of people still on the call. I want to thank everybody for being here. And I want to thank all my traders for being here because, you know, we gather all people from all corners. Some people ask me, what's your theme for this month? And I'm like, well, it's going to depend on who signs up, right? So it really comes, I mean, it's like putting all the balls into the thing where you're going to turn it around. Like if you're doing a lottery, you just throw a bunch of stuff in there and you wait to see what's going to come out. And I really think that the people who come to our events, and Jeff, you know, when are they going to get a chance to talk to you or see you or hear about this and get this great offer?
Oh, great
Right?
question. Yeah, so we do hold Tuesday live sessions with me. So I host those every Tuesday at 7 p.m. Eastern. So we'll give you information on that when you join. But I do coaching in addition to all this. I didn't even mention that, but you guys get to talk to me as well live every Tuesday night.
Yeah, and I want to tell everybody who's still here on the call and anyone who's listening in the future that these are recorded on purpose so that you can actually get in touch with these presenters. But everyone who was here live, you will get email from everybody. And I don't know, I feel like email is kind of, we're all a little tired of email. And I know that because we've lived through, you know, the COVID. And the deal is that if you get emails and you find that they're not serving your purpose, then you just simply unsubscribe. That's it. But at least everyone that comes to these webinars will send you an email so that you can see the offer that is on the table. And so by Friday, you'll be getting email. So don't be surprised, right? And everybody else, Jeff, thank you so much for being here.
Thanks for having me. Great to be here. Thanks again.
I know. All right, guys, let me switch this over, and congratulations to everyone who stayed to the end. I'm going to be implementing some kind of prize for when you stay to the end. I'm going to get into that, and I think we're going to implement our speakers offering something while they're talking. We'll see how that goes because we're already in Q4, and everybody who's still here, if you have a favorite speaker that's never spoken at a Traders Exclusive event, please send them an email and ask them to get in touch with us. It's support@tradersexclusive.com. And we are always looking for speakers. We want good tips and trade tips and tricks and strategies for everyone. So thank you for being here. And I just want to tell you, let's see, that was Jeff Tompkins of Altos Trading. And this has been a presentation of tradersexclusive.com. We have twitter.com, we're options_info, and we're tradersexclusive.com, which is where you're going to find the replay of this webinar. Thank you so much. Y'all have a good day. And from everybody here at Traders Exclusive, we wish that you would trade smart and trade well, and join us again at our next event, which is going to be September 21st. Keep on the winning side.